I hope members are back. Apologies for the technical glitches. Actually, the internet went in our own area. Whole area internet got diffused. And my mobile and Wi-Fi belong to one company only. So it was not working. Now those of you are back. Can you read question number 36 on your screen? And let me know what do you think would be the answer.
Value of a firm is usually based on externalities, value of debt, value of equity, value of debt and equity. Value of debt and equity. A.
So I'm just requesting members to join and put the message out so that members may join. Now see the interesting part. This is the first sample paper of IBBI issued in April 2018, and they've given the answer D, which is not right.
Correct.
So they issued another sample paper in 2019 April. Now, any of you would like to change your answers again, or would like to continue the same answer? Last time they gave D. So what do you think the answer would be?
Value of a firm is it's A only.
So now in April 2019.
Answer is A.
A can be the answer.
So in April 19, they issued another answer. What is the answer? No, story is not over yet. We have one more sample paper. So another sample paper came in April 2020. But in the meantime, we know B is also incorrect.
Correct.
And if you read this question thoroughly with a cool mind, you will definitely get the answer, which is A. Now A is the correct answer. Now we need to understand few things. One, why B, C, D cannot be answers. Point number one, C is totally ruled out. You cannot have a value of debt as a value of firm. So that is totally ruled out. Now you let me know what is the difference between B and D. Is there any difference between the answer if you arrive from B and if you arrive from D? Will it be the difference? Yes, no, maybe. If I could think on this.
Both are same.
So obviously we should, when we read the question, we understand if both are same, then that cannot be answer. Because if I arrive assets minus all liabilities, it will give me a value of equity. Correct. So in a question, they cannot give you two answers because it's a multiple choice question. I need to choose only one. So answer is A. Now the point of showing this error to you is to prepare for this exam, we need to read sample papers, and that is mandatory. But do not blindly ratify the answers given by the system. It may happen they would have given a wrong answer in one place in the updated sample paper, they would have rectified the answers. So because in the exam, they have the right answers. So don't blindly go because it might be a typo error from their end in the sample papers. So for preparing exam, we need to read mandatory all sample papers. Should I also read sample paper of land and building and plant and machinery? Yes, no, maybe.
No. No.
Because we never like to study more. Even I do not like to study more. But what if I tell you, yes, you need to mandatory read sample paper of plant and machinery and land and building? Am I talking sense or I'm just saying anything for the sake of saying? Because you will always say, आप तो बन गए वैल्यूअर, आपके क्या जाता है, कुछ भी बोल दो हमारे लिए, पढ़ना तो हमें है. But why you should mandatory read land and building and plant and machinery sample papers issued by IBBI, which are available on IBBI website? Because yours and their asset class have a common syllabus. You also have economics, income tax, IBC. They also have economics, income tax, IBC, transfer of property, SURFACE. So your majority theory portion are same. So it will happen actually. Minimum 5 marks you will get from sample papers mandatory. You can note it down. In your exam, at least 5 marks question will come straight away from sample paper as it is. And this is a low hanging fruit. So when we know it is coming in exam, at least read thoroughly. Anyone has a question or? So then I can. So we left at the screen where the slide got not functioning. So when you get a screen like this in exam, what will happen? You need to answer, and then when you press next, it will go to next screen, and your color coding of questions will change. So there will be a different color comes in the grid. So you will get an idea. Do I need to review it again or no? So below every question, there will be 3 boxes. Previous, next, review. Previous, everybody knows, go back to old question. Next means go to next question. There will be a button called review. What does that mean? Review means, suppose you are confused between finance minister and RBI governor, and you are not 100% sure which is the correct answer. So for the sake of giving answer, you will press RBI there, and then you will also press the button review. So what will happen in the grid? It will show you separately that these are those questions where you have indicated that you need to go and review again. So it will be very easy for you. Out of grid of 90 questions, you can easily pinpoint which questions you need to read again, give a different look, and change your answers accordingly. If you have attempted a question and you don't want to give answer again, you can unanswer that also by clicking on the same option again. You have enough time in exam to prepare for entire case. You have 90 questions. 80 questions you will be able to solve in less than 40 minutes. So 80 marks you will be able to solve in less than 40 minutes. Remaining 20 marks case studies, you have sufficient 80 minutes time in your hand. You have total 120 minutes. And how can you solve 80 questions in 40 minutes? The moment you see a question on your screen, immediately you will know you know the answer or not. If you know the answer, in 1 minute, you can attempt the question easily. If you don't know the answer, how much time you take, you will never ever come to know the answer. Because these are MCQs. Either you know, either you don't know. Fluke work in the last, when nothing happens. Do not attempt 100% questions if you are not aware. Suppose if you attempted 75 or 80 questions and you are not sure on 10 questions, do not give blind shots. A lot of people fail just of attempting 100 marks questions. So even if you attempt 75, 80, 85 questions, more than sufficient. If you are hearing the question first time, don't know the answers at all, do not attempt at all. Anything you want to ask on exam, then we can take. Else I can start with the finance present. Any question you have on exam? At times it may happen that when you are working in center, your screen may crash. It may happen the system automatically shut down. Then you don't need to get scared. Their systems are very foolproof. Wherever your screen has stopped, it will start from the same place. They will start from the new system. So you don't need to worry on if something goes wrong in exam. Because at times it happens. They have old computers. So it may at times give a crash. But you don't need to worry on that. One thing you need to remember, when you are doing case studies, it will happen your answer tally word to word with the options. Suppose they've given an answer 2.87. It may happen your answer will come 2.85. That does not mean it is wrong answer, because which is the most approximate answer. So be careful on that, because not all answers will always match in case studies. Because it may happen you are using 2 decimals, system using 4 decimals, so answers will definitely change. It will be nearby in the same range. Just give me a minute.
And an increase in payments so long.
Now, finance function is a very simple topic. If your basics are clear, then this can be very easily achievable. So we know we all need finance, whether it be a company or whether it be individual. Everybody needs finance, and finance is the backbone of a company. Any organization without finance cannot run. Even if you have the best product, take example for startup. If you have best idea, but you cannot scale it due to lack of finance, it will not sustain. Somebody else will acquire. So finance is always required. What are the basic 3 decisions which is expected from a member to take care of finance? Generally, question comes that a member need a finance manager or CFO need to take care of 3 decisions. Any idea what are those three decisions? You can think of.
Investment decisions,
Yes.
liquidity,
There are two more.
working capital.
What is the proper name of that working capital decision? You are on the right path.
Financing, investing, financing, and working capital.
Cash flow management.
So financing is one, investing is one. What is the third one?
Operational management.
Cash flow management.
Will not come in financing. Operational management. I'll explain shortly in a minute. And in exam, a very basic question comes on that. I'll just explain. So we all understand finance objective is to ensure the maximization of shareholders' wealth. That is what we are looking for. For this, you need to plan investments, analysis, budgeting. And we understand there is a difference between finance and financial accounting. Accounting only concerned with profit loss, finance concerned with cash flow. So whenever we do a valuation, we look for profit and loss or we look for cash flows.
Cash flows.
When you do a DCF, we always look for cash flow. Even if you are earning a huge profit, P&L in books, but if you are not having a cash flow coming in, you will get a negative value. And vice versa. You are showing a losses and losses due to depreciation, which is non-cash item. But if you are in cash flow, if we add depreciation, it makes a profit, you'll get a higher value. So there are three broad decisions which is expected from a finance manager. One is investment decision, second is financing decision, and third is dividend decision. These are overall broad categories. So investment decision means, should we invest into capital budgeting, long assets, or should we manage working capital management, where the fund should be deployed? That is one. What is the first parameter to decide for investment decision? If you are a finance manager, how you will decide and tell management, yes, we should invest. Any thought process? If you are a finance guy, how do you tell management that we should invest in this?
Look at the payback as well as the IRR, whether that is desirable for the business. The ratios are desirable, and the payback is
Payback period, or you will say, what is your cost of capital? At least your returns are coming more than that.
Yeah, IRR should be more than that. Yeah.
If my cost of IRR should be more than that. So if I'm borrowing at 10% from bank and my return is only 9%, so it will not be a sane decision to invest in that project. So one starts with investment decisions, then comes a financing decision, that to invest in that project, should I use my own equity or should I borrow money from the market? So even if a company is 100% debt free, does not mean it is the right approach. It may happen that if you take a mix of debt and equity, you may derive better value. So that choice somebody needs to make. Apart from financing decision, the most critical decision comes, should we pay dividend to shareholders or should we deploy that same money into the business again? Both have two factors. If I distribute 100% dividend, then shareholders will be happy. my market price will go up in the anticipation that this company pays a lot dividend. But what will harm? I will not have enough internal resources for making investments. And if you do not make investments, the company won't grow. Take a classic example of now Reliance. So they are investing in so many areas because to continuously grow, you need to keep investment churning out. But on the other hand, if you do not distribute any dividends, you deploy all dividends which are supposed to be paid to shareholders into the business, then what happens? Your market sentiments goes down. Take example for example, the year when Tata does not pay dividends, people started the share value gives a negative reaction to Tata shares, and the stock market tanks for that particular company because individual shareholder expectations are that if I'm putting money in a company, I should also get consistent returns. So that is the reason a manager need to strike a balance what company needs and what shareholders needs. Finance we can raise by various ways, either by equity, by preference, by internal rate reserves, debt. You can take debt from India or abroad, wherever is cheaper for you. So we discussed the decisions in finances. A manager need to decide if I'm having a capital busting, should it be payback period is lower or high? If it is a law, if it is a choice, and this finance questions in exam will be purely common sense based. If as a finance manager you had two projects, one giving pay years and one giving payback in 7 years, what will be your choice? Just give me a minute. I think net is just. Just give me a minute. I think again network is making an issue. So members, if you can let me know, is the voice audible now?
Yes, sir.
Okay. So I'm using my mobile now. So generally when the question comes in finance, typically it will be very basic questions. And if you apply logics, you'll always get answers in finance. So normally how you decide to invest, whether my IRR or profit index is higher That's a common, that whatever my cost of capital or hurdle rate is the rate at which you have borrowed the funds. If I'm getting a return which is more than my hurdle rate, you will always go for that investment. If you're not getting from that, you will not take those investments. Dividend decisions is always in the hands of management. How much you would like to distribute. If you have any future plans, you will try to keep some portion with the company so that your future sustainability can be ensured, because you do not distribute all dividends in one hand. And that is one of the reasons why in India, there is one of the reasons in India why we do not value investment property at fair value. So though it is not in your Ind AS, but just for concept, I'll explain you just for understanding purpose. In India, we have Indian Accounting Standards, IAS 40, which is talks on investment property. Globally, worldwide, you fair value the investment properties abroad, in book the gain or loss in the books, and you distribute the dividends on that. But in India, you value the investment properties at cost only. Because if I fair value investment properties, make a gain and distribute the dividends, then it may happen a crook businessman will always get his value very high, book a gain and distribute the dividends which will never earn by the company. So a dividend decision is to be ensured you don't distribute all money, you keep some reserves for the rainy days. And what happened in COVID, that is a classic example. They do not always keep 1 year or 2 years of liquidity in the company. A lot of people who are working on a lean fit model, not having any cash and investments with them, they suffered a lot. A simple question comes on markets. How many markets we have? So in India, we have typically 5 markets we discuss in financial markets. One is capital market, which I'm sure we all are aware of. Capital market, that is NSE, BSE, 2 prime markets we have, where securities are issued and traded. Then we have commodities market, where instead of securities, you actually deal on commodity products like grains, metals, gold, silver, oil. So this is a place. Another market is derivatives, where again you deal in future and options, forward swaps. Then we have one market, foreign exchange market, where a lot of people deal in currency.
Sir, we are unable to hear your voice.
I think again internet is playing a problem today. So that is one kind of markets. The exam, a simple question comes. Initial public offer are issued in primary market or secondary market? So it's a very simple question.
Primary.
Those who are
Primary market.
Primary market.
Primary.
Trading happens in secondary market. So when the company is issuing first shares, it is considered as a issuing in a primary market. After that, it is considered as a secondary market. Security markets, I am sure everybody knows security markets. So that part we all know. In exam, a simple questions come like this. These are all questions from exam. So once you get a slide, you can go through the question answers. I'll only take the questions which seems to be more critical. Answer question number 2 and question number 3. First read question number 2 and if you can answer that.
D.
Second is D option. Second question, D option.
Is it still not audible?
Audible, sir.
A.
Is the voice still issue?
No, sir.
Not now.
You are audible.
Okay. I think there is something gone wrong on internet today. It is on Zoom today. I'm not able to attend. I think it is showing a message. There is an error code. You cannot continue from mobile. Something wrong in that. Okay. So for the second question, what would be the answer of the second question?
D.
D option.
It cannot be any objective of the finance to have a maximization of charges. You will always like to reduce the charges. And the option of question 3, which is example of financing decision. So that means you need to balance between owner's capital or outside capital. That is financing decision. B is always an investment decision. B will not be the finance decision. Go through whenever you get time. I'll take 2 important points. Now, before that, so it should have been covered in economics. Anybody who knows, anybody who does not know what is repo, reverse repo, if you don't know, then I can spend 2-3 minutes on that. If we all know, then I will not spend time. Anybody who does not know what is repo, reverse repo,
So you can give base for 2.
I think I'm not able to hear. I think there is some voice issue at my end also and internet. So if you can write on chat, if we don't know, then I'll continue. If we know, then I can skip. Because in exam, a very basic question comes on repo, reverse repo. Very basic questions. So let me see if I can take those questions. I'll just give 2 minutes. Just give me a second. Let me see if I have those questions. I can show. A very basic fundamental question comes on repo, reverse repo. I'll take shortly, just go through the slides. I'll take shortly. Now, in financial statement analysis, you get very basic questions. Can you quickly answer this question?
None of the
Quick ratio.
high margin of solvency.
If you can use chat for next half an hour, it would be good, because my problem is it is not even. No. Don't be sorry. It's just that I'm not getting any voice. It is getting some issue here in the internet. So we are getting option C, which looks sensible. We get one option D. Mr. Dang is given option D. Rest others have given C. Okay. Why, Mr. Dang, you have given D answer? Any idea?
It is written solvency. So, like, but these ratios, liquidity ratio, quick ratio, so the liquidity, right?
Absolutely correct. So this answer is D. And in exam, what happens if you do not read question properly, and that is the reason the exam is not tough. Do you think question is tough? My answer is question is not at all tough. But yes, question is very tricky. And why it is tricky? Because question is asking for solvency, and solvency cannot be justified from liquidity. Remember, we have different ratios. One kind of ratio is liquidity ratios, where you try to find out how much liquid position the company has. That you find out by using current ratio, quick ratio, acid test ratio. That is a liquid ratio. Then there is one ratio called solvency ratio. Whether the company is solvent. It is not necessary that the company may be liquid but may not be solvent. It is also possible. Solvency ratio would be like debt equity ratio, interest coverage ratio, whether your profit is sufficient to pay the interest or not. If you're not able to pay interest, it is not a solvent company. So solvency is different, liquidity is different. What is solvency? For example, I am having a land bank with me, which is an example of all real estate company. I am having 100 crore land with me on my balance sheet asset size, 100 crore. So my net worth is 100 crore. I am a solvent company, and let's say my liability is only 10 crores. So I am having 100 crore land and 10 crore liability. Do you say I am a problem company? By just seeing my solvency, you can never say I am a problem company, because I have land of 100 crore, which is a solvency. So I am solvent. But now if you ask me, do I have a financial crunch? Am I a very liquid company? I have a liability of 10 crore to pay, but in my bank account, I only have 1,000 rupees. So am I financially viable? Do I have a liquidity issue? Yes, I have a liquidity issue. Though I am not having an issue of solvency, because if I sell the land, I can easily make 10 crore rupees. But if tomorrow the I cannot make it because I do not have enough liquidity. So read the questions thoroughly before we go through exam. So it is none of the above. Quickly answer this one. A, B, C, D, 4 options. What do you think?
D is the answer.
D.
What about other members? We have other members. I assume we all have to give exams, those who are attending the training, right? I don't think we have any participant who is just doing this training for the knowledge sake. And he says, exam to nahi denge, apan sirf knowledge le lenge. Because then that knowledge will not help you, right? If you don't get a certificate. So the remaining people who are attending the training should respond. And it does not matter to me you respond or not. It will actually matter only to you only. Because in exam, you should not make those mistakes. So majority of people give an answer B. Now, remember, if you ask your father or forefathers or your ancestors, should I invest in land or I invest in gold? What will be their first advice? What do you think would be their first advice? Land to young. Normally, we say always invest in gold. Why we say normally invest in gold? For one reason.
Highly liquid.
क्यों gold के लिए बोलते हैं?
Highly liquid है sir.
Highly liquid. And what do we call? It is like a. Remember have you heard a term? A hard cash. It's like a hard cash. सुना है term को भी hard cash?
Yes, right. Yes, right.
What does that mean? That will mean C or D?
C.
So it is C. Hard currency means the currency which is highly liquid, and dollar is considered to be the hardest currency on the earth. You go anywhere in the world, dollar will be accepted. I was in Middle East for 8 years. You give dollar to any nook corner of any Middle East country, they will accept. You give Indian rupee, they will think 10 times before accepting. Because dollar is worldwide acceptable. It's called a hard currency. So now understand, in exam, a question will be very complicated. But if you coolly think, takes time, you will always get an answer. Always. If you can just spend 1 minute in answering first question. First question, I'm not sure you are able to read. Is the slide is too short or big? Just read one question. First question, then I will solve this. Debt equity ratio is 3:1. That is the data you have given. 3:1 is debt equity. Total assets are 20 lakh rupees. Current ratio is 1.5 to 1. Owned funds are 3 lakhs. What is the amount of current assets? It should not take more than 2 minutes maximum. Debt equity 3:1. Total assets 20 lakhs. Current ratio 1.5:1. Owned funds are 3. What would be the amount of current assets? Quickly.
D.
C.
D.
Pakka.
C.
C.
Now the correct answer is 12 lakhs is the correct answer.
C.
And if anybody is not able to get 12 lakhs, the person who has done the correct answer in class will explain the remaining fellow members. So 12 lakhs is the correct answer. I will rush this question. I will not explain now. If somebody is not able to understand, not able to get answer, I will explain maybe after a session. You can catch hold me, or any of the member can do it. It is not complicated. I will leave you at around 2:30 so that you have enough half an hour extra time to spend. Just read later on when you get the slide. That is not the intent. Now in exam, you may get certain fundamental questions like this. Your company receivable turnover ratio is 6. Industry receivable turnover ratio is 4. Is it good or bad? Your view.
Good.
Good.
So I'm getting two answers. Someone is saying good, someone is saying bad, because I have given only two options. So it will be either good or bad. Now think logically, is it good or bad? I am able to churn my debtors 6 times in a year. An industry is able to churn 4 times in a year. So who is better able to churn out? So my company is better. I have a better receivable collection policy. So it is better for me. It is good. Shiva sir, we are clear on this, or we have a disconnect on this? If you have disconnect, then we need to understand. My only issue is I'm not able to hear any voice. I can understand you also will be having the same issue. Voice is getting too much cracked here due to network issue. So today is not a good day, at least for a net of the net. Now another question may come like this, similar. Your average collection period is 22 and industry is 18. So now this obviously will understand it is bad for my company. Industry can collect in 18 days, I can collect in 22 days. It becomes illogical. So just simple questions will come like this. You need to aware of the basics of the formula. Example, a question comes, what is another name of quick ratio?
Asset test
I'm sure
ratio.
we all
Asset test
asset test ratio. That is the name of quick ratio. So they ask such a basic questions. What is defensive cash interval ratio? Anyone has idea?
Cash to expense.
So it means that whatever cash you have in hand, assuming no further cash inflow happens, then how long you can sustain your regular operation expenses. So suppose my regular expenses are 1 lakh rupees and I have 3 lakh rupees cash maximum. So it will come 3 days, 3 months I can continue. That is the objective of defensive cash. That means assuming no further cash in, then how long my operations can sustain. That is one expectation. Now, there are simple question comes on horizontal analysis and vertical analysis. So for anybody, so I'll explain. If I show you, then only I think you'll be able to explain better. Horizontal and vertical, what do you mean by these analysis? So for a financial reporting, we need balance sheet. Now, financial statement includes, now it is a sudden change from last financial statement and now. Now financial statement should include balance sheet,
Notes to accounts,
profit and cash flow, notes to accounts, and then new things are added. Notes to accounts and a new thing added.
accounting policies.
Statement of changes in equity. That accounting policy will be included into notes and schedules. So we assume that the schedules and notes you are attaching, that will include your accounting policy and notes to accounts. But a new document added, which was not there earlier, that is statement of changes in equity. For all Ind AS, financials, we need to have mandatory 5 statements now. So in exam, a question may come, which is mandatory in financial statements now. So it is statement of changes in equity. That you need to know that this is mandatory. It was not an old standard, but new it is mandatory. Balance sheet, I'm sure we all know what is balance sheet. I don't need to spend time. Income statement, we know. Cash flow, you know. Statement of changes in equity just added recently in Ind AS. It means that you disclose what are the transactions happened with shareholders. If you have given them dividend, if you have given further issue of shares, you just disclose separately. That is the changes in equity. Earlier it was not there directly. Indirectly it was always there. Ratio analysis, we know. Common size, now I'll explain this. What is it? Vertical and horizontal. I'll just explain in a minute. Now, whenever we do analysis between interfirm, intra-firm with same company, there are two kind of analysis: horizontal and vertical. Horizontal means it is line straight. That is horizontal. Now, in sleeping line horizontal, question comes: what is the base you take for comparison for horizontal analysis? So what is the base we take? The base we take is the previous year. So we are having comparing 2 years, and if your management is asking to do a horizontal analysis of each line item, then what the base you will take? The base you will take is the previous year figure. Whether you are doing balance sheet analysis or income analysis, it will be year on year. For suppose now management asks me to do a vertical analysis, then what should be my base for vertical analysis? Because vertical is standing straight line, but there is a difference between horizontal and vertical, right? So in horizontal, I told you that we take a base year on year for comparison purpose. For vertical analysis, what will be the base we will take? Any idea? For income statement? And in exam, they are asking such a basic question. Just for a vertical statement analysis of income statement, what is the base you will take? This I have already covered in the questions. Which answer: it is gross revenue, top line revenue will be taken for income statement. That is correct answer. Income. Now for balance sheet, what you will take for same vertical analysis? So in vertical, we will take the revenue as a base. So revenue will be taken as a base. In balance sheet, we will take total assets. Exactly. So balance sheet, you take total assets base for a comparison, which will be equal to total liabilities and equity. So just know these basic small things. Assets, liability, equity, I'm sure you all know. I don't need to spend time on asset, liability, equity. P&L, we all know. I can skip. Cash flow, simple question will ask, what are the three activities in you show cash flow? So we all should know, I'm sure we all know it is operating, investing, and financing. So they will just ask such a basic question also. And why they ask such a basic question, we need to also understand, because at times we have MBAs, we have BComs also earlier who used to give exam, who are not familiar with pure financial concepts. So they are asking very basic questions. So recently they asked a very basic question in exam of our income tax. Tax is rounded off to which level? So 10 rupees they round off to next 10 rupees. So maybe only those who practice will know this much better. If you don't practice, it will be difficult for basic questions. Ratios, we discussed first part. There are 4 kinds of ratios generally: liquidity ratios, solvency, activity, and profitability. Just try to understand ratios once. When you get a chance, read the slide. We all know how to calculate gross profit, EBITDA, net profit. These ratios everybody knows. I'll take the ratios which we are not sure and very confused. Now they ask a very simple question. Very simple question. To compute receivable turnovers ratio, what will come in denominator? And that's a question in exam. To compute receivable turnover ratio, what will be in that denominator? So if you're not clear on fundamentals, because in exam it is very difficult to understand, because we have read these ratios 20, 30, 10 years back when you would have cleared finance CA exam. Again, question, to compute receivable turnover ratio, what will become in denominator? Will it be sales or in denominator? Or it will be debtors?
Receivables will come in the denominator.
So read the first line. Receivable turnover ratios, annual sales divided by average receivables. So in denominator, it will be average receivables. So we need to be very careful what we are writing in exam. So just basic fundamentals you need to go through. Rest all you can go through. Ratio, and I don't need to spend time. Okay, take this for 5 minutes, at least for 2 minutes. Understand this. Question comes on this ratio, because this is normally a lot of people are not aware of this ratio. So there's very basic questions. What is this ratio known as? DuPont analysis. What does this mean? It means that there is a gentleman in New York who made this theorem earlier, long time back. So first he made a ratio, return on equity ratio, and the ratio came like net income divided by average equity. That will be a return on equity formula. So that is one formula. But what is the problem with this formula? In this formula, I just get one number to know. So suppose the industry says, okay, Tata is 10% return on equity, net income divided by average equity. Now, it may not be a foolproof number to compare with other industries. So they expanded the formula. How did they expand the formula? They use net income divided by revenue multiplied by revenue divided by average equity. If I combine this equation, I will get the same top line, net income divided by average equity. But here I am getting 2 separate verticals. Now they further expanded this. Income divided by revenue multiplied by revenue divided by assets multiplied by assets divided by equity. If I combine 3 equations, I will still get the first line in the nutshell. But now what happens with this? Now I'm getting 3 different numbers. So now my ratio is comprising of 3 numbers: net profit margin, asset turnover margin, and financial leverage. So if somebody needs to compare industries, he will get broad 3 numbers to compare. So I can compare on how much is the industry net profit margin, how much is the asset turnover and financial leverage. Based on these 3, I can find out, should I invest in the company or which company? Because if you don't have financial leverage, I may company better having financial leverage. So we need to just know this formula. So in exam, the question may come like this. For calculating DuPont formula, we need net profit margin into asset turnover into space. So you need to know financial leverage. So they will give 3 options: financial leverage, revenue leverage, and other things. So just need to know what is the name of full formula, what is the 3 components. Just read that. That will be sufficient. Now, a simple question may come on finance credit analysis. To give a loan, what is the bank first thing bank check? They check your collateral, your capacity, or your character. What is the first criteria bank takes when sanctioning your loan? Any idea? If the bank has to give loan, bank will check first what? The collateral you are offering, the capacity to pay, or the character what you have. It is always the character that is the first test. No character is the first. No bank will say, let me give a loan to Vijay Mallya because he's putting his aeroplanes as a collateral to me. So collateral is the second last thing bank will ever do. Bank would not like to run on collateral basis. Bank would always like to see what character the person has. If you have a good character, bank may compromise on collateral. But if you have a bad character, bank will not compromise on collateral at all. So such a basic common sense question comes on that. I think this is sufficient. Let me now just take 5 minutes on repo, which I mentioned. Just give me a minute. Let me see that. Okay, just give me a minute. Okay. Can you quickly answer this question?
Service sector.
Service.
Anybody has a different answer? So I have not received any response from Prithvi, Ravi, Dr. Poddar. The rest everybody has responded. And Vijay Kumar Guptaji also not responded. So a lot of people in exam answer agriculture, which is a wrong answer. Service sector is a right answer. It contributes more than 54%. But they are asking such a basic question. Now you will say, how do we come to know that service is the answer? If somebody reads newspaper ever, at least Economic Times somewhere or business page, at times you will get this, that maximum GDP is contributed by service sector. So basic questions are coming. This question may not be in your books, but if you are aware of common sense, you will get the answer. I'll quickly answer this question, then I will explain repo, reverse repo, and other things.
Repo rate.
A. Repo rate.
Now, anybody can explain me what is repo rate?
The bank rate, not the bank.
What I can explain.
Sorry.
Yep. Yeah, basically it's a facility which banks have with the RBI, and to tide over their liquidity requirement, they are allowed to raise up to 1% of their current
So the
liabilities.
answer is, so the correct answer is repo rate is the answer. Now, what is bank rate? So I'll explain what is repo, reverse repo, bank rate shortly. Just if anybody can let me know what is bank rate then. So what is repo rate? Repo rate is, it is a repurchase obligation. So a bank will go to RBI. So SBI will go to RBI and say, I'm having a liquid crunch. I need some money for short term, maybe 24 hours, 48 hours, 7 days. Short term, I need some money. So please give me some money. RBI will say, okay, I will lend you. So take money from me. So RBI will give money to SBI, but RBI will take some security from SBI. RBI will say, you have a lot of T-bills. So give me your T-bills. I take your T-bills, treasury security bills, keep with me as a collateral. So repo rate is the rate where RBI lends to the bank against the securities which banks will put it. What would be reverse repo? Then it will be exactly opposite. The rate at which bank lends to RBI. So suppose bank have a lot of excess liquidity, bank will go and say, RBI, you take it us. So bank will give liquidity to RBI. Bank rate is the rate where RBI lends to the bank for business purpose. Suppose SBI comes to RBI and say, I need to fund Jet Airways 1000 crore rupees. I have only 800 crore rupees. Give 200 crores for funding purpose. In repo rate, the objective is not for funding. In repo rate, the objective is short-term credit crunch. But in bank rate, it is always for a business purpose and for a lending purpose. And the key difference between bank rate and repo rate, bank rate is the collateral free. There is no collateral RBI asks for bank rate. Now, assuming if you know this, which rate will be normally higher? Repo rate will be higher or bank rate will be higher generally?
Bank rate.
Bank rate.
Always bank rate will be higher. Always bank rate will be higher because it is collateral free. Now, quickly answer this question.
%4.
A, B, C, D.
A.
What about other members of Prithviji and Dr. Poddar, if you like to respond? If you are attending, because by responding, what will happen? Your attendance will be marked. Tomorrow, IBBI will say you have not responded. Now, Mr. Ashok.
Sir, I will respond.
And Mr. Dang is given a different answer. Okay, no, please do not take me seriously. I am just making things light. I am not pushing anybody to respond. I'm just trying to keep all awake, because after lunch it becomes difficult to go through lectures. Now, Mr. Ashok and Mr. Dang is given a different answer. One of them is correct. Which is the correct answer? Now, other people should tell. Somebody just mentioned that I responded. Who it was, I'm not able to know. I think recent somebody made one voice that Miss Prithvi. Prithvi Ravi, why D is the correct answer? Can you let me know? If you like to speak or if you like to chat, why D is the correct answer? So D is the correct answer. Now, if you let me know why D is the correct answer. Anybody? Why?
I think 5%. 5%.
Pakka.
No, I think I'm not sure.
No, RBI does not know.
I was thinking that you guys got the correct answer with a correct logic. Absolutely, Mr. Ashok. Absolutely. And this is one of the trickiest question IBBI has asked, and I the person who have drafted this question. Remember what the question they are asking? how much interest cash reserve ratio? RBI do not pay a single penny interest on cash reserve ratio, zero. And you know why they are 4%? Because earlier 4% was the limit which a bank supposed to maintain as a cash reserve ratio with RBI. What is cash reserve ratio? Suppose a bank takes a deposit. So you go to bank and say, take my 100 crore as a deposit. So that SBI cannot directly give 100 crore as a loan. I have received deposit, I cannot give that 100 crore as a loan. RBI will say, keep 4% with me as a security for a liquid. So out of 100 crore, 4 crore will go to RBI against cash reserve ratio. And then RBI will say, apart from 4%, keep 18% as SLR, statutory liquid ratio. Do not distribute 18% also to loan. So RBI is asking at times very interesting question. And if you do not read question properly, you jump to conclusion, you will go wrong. So just read what RBI is asking. Now, quickly answer this one so that I can finish session now. Ashokji, you broke my heart.
Sorry.
Now, rule number one. Rule number one. Whatever your first basic instinct says, your gut feeling says that should be the correct answer. If you try to too much think, you go wrong. Now, remember what is repo, reverse repo? We understand repo is what RBI lends to bank, and reverse repo, which RBI takes from bank. RBI will never pay heavy interest to the bank. RBI will always charge because they are a regular. बाप है सबका. So that's the reason. Generally, repo rate will always be higher, always, all the time. Okay. I think that is enough for the day. We can take a break now, and after around 3 o'clock, you can again reassemble. The next faculty will come at 3 o'clock. I thank you all for your patient hearing. And if all presentations will be shared on the Google Drive by Vijayji and Sunil, maybe after the evening. If anything left which I can be of any assistance to you, any help, feel free to get in touch. I'd be happy to assist. Just again, my humble request again, start preparing from now onwards. Don't wait for the 50 hours to finish to give exam. Start reading now so that once the exam finishes, and I'm not sure did Vijayji informed you or not. This is the 5th batch we are having. Last 2-3 batches, member finish the classes and in 10 days they gave exam and they pass. Because the memory is more fresh if you give exam quickly. So try to give exam quickly and start practicing MCQs. There is one website that might help you for MCQs, one YouTube channel that is known as Valuation Insolvency Power for Prep. So if you go on Google, YouTube, you'll find Insolvency Valuation Power for Prep. So Power Prep is a YouTube channel you'll find. They have a lot of questions which is relevant for your syllabus and valuation exam that will help you. And there is one website called examveda.com. So you'll find on Examveda a lot of MCQs for preparation purpose. And the only objective, the way to pass the exam is solve as much as MCQs. Because then only you will come to know what are the errors in it. Otherwise, you will never able come to crack the exam. Because memory, you cannot remember everything. But once you try to solve MCQ method, you will be able to know much things better. So I thank you all for hearing. And I'll take sign off now. If you have any questions, feel free to ask before I wind up.
Thank you very much, sir.
Thank you very much for your day, sir. You made it.
Thank you all.
Thank you very much.
You can take a break till 3 o'clock now. I'll resume at 3 o'clock back. Thank you.
Thank you.
Good afternoon.
Good afternoon, sir. Good afternoon.
Yes. I was just waiting for arrival of few people. I was just there 5 minutes before schedule.
Hey, I saw you.
Yes.
Seen you, right?
So before I could just dwell on the topic given to us, let me just get the introduction from you people. And before that, let me introduce myself. I'm L. Muralidharan, chartered accountant by profession. And since 1987, I've been in practice. I'm based at Chennai. And besides besides practice, I used to take class for CA students also at Chennai, and I have that way 30 years plus experience there in taking classes, and I qualified into registered valuer only this Tuesday. So prior to this COVID, any literature that is coming up on insolvency and bankruptcy code and all that, I used to trash. So my area of focus was only on taxation and audit. And even when there were some assignments which were coming up, I used to pass it on to people who were good at it. And that is a point of time when one of the partners of is an ex-partner of Big Four. He approached me. He's elder to me actually. I'm 54 years old, and when he approached me for handling a class for him exclusively, I said okay. That's not. Am I audible?
Yeah.
Very much, sir. Very much.
So that was a time at which I was just asking him what is the syllabus. He was not very clear about the syllabus, but he wanted me to take class on options. I said, okay, but I need to know what is the depth at which I should pitch my deliveries. Should I take it up at preliminary level or should I go deep? There is a point of time I started probing in. I found the contents were all the topics that I like the most. We have one paper, SFM in CA final, paper number 2. It was MAFA in the earlier case, and which was financial management when I took examination. So then with the majority of the marks coming in that particular paper, I just thought, why not I give a shot? I just completed by first week of August that course, 50 hours of compulsory thing. And I was just trying to find out slot, and I could get only by 8th of September. In my very first chance, I cracked it. I got 63 marks. So before I could, because of the fact that I know on the subject financial management, the area where I concentrate for taking class besides accounting standards, I could just crack it. But I had the anxious moments of taking up the exemption because 6 months back I took a DISA and I failed by 6 marks there. So that bad memory was there. So I was just taking it up a little seriously and cancelled all the classes for last 3 days and took up and cleared. So first and foremost thing is that before I could tell something on the subject, let me tell you as how to handle. Is it okay if I handle just generally about how to take up the examination for 5-10 minutes and then to the subject?
Yeah,
Most
of
welcome.
course, of course.
Okay. So the lesson what I've learned by taking up DSA and failed and taking up this particular course and cleared is that I never had anybody giving me guidance as how to take up MCQ. MCQ was considered to be very much new, and I used to feel that known questions we got to handle and all that. And in DSA, I scored 6 marks short, where I've answered for all questions. That's a mistake I committed. First and foremost thing, what you people need to do for this clearing is, it is not rank that we want. It is not 99 we want. We want that minimum 60 marks to be scored. That is what you got to have in your mind. I'm not preaching. I'm just telling my experience of what really failed in my DSA and I could clear in this particular case. So 60 marks is the main area. In that 60 marks, 40, that is 30 to 35 marks would be coming up only from this financial management part. 20 marks from case studies, another 15 marks from this cost of capital, leverage, and that sort of financial management areas on which you should concentrate. So as far as the other areas are concerned, SARFASI and IBC and macroeconomics. So the rest of the syllabus occupying the remaining part. So therefore, under examination conditions, what you need to do is that you divide the questions into 3 parts. I will just share the screen there. So questions, you can put it into 3 categories, where you are 100% confident. It is not that 100% it could be correct. We are confident that it is right. That is what I say, 100% confident. 100% no confidence at all, or not confident at all. Third one is that you place in between. Correct. 100% confident you answer. 100% no confidence, do not answer at all. Leave it. Because you have negative marking, better you leave when you are not confident at all. In between, there is 75% I am okay with it, 25% there is a doubt. Another one is that 25% is only you are confident, 75% you are not confident. So what I would suggest is, in this 75% you answer, but put it for review. See, there is an option that you have. See, most of the faculties I've also attended for 50 hours, most of them will tell about the subject, but in that particular moment, what you decide is very, very important. So how much our knowledge that we have in practice, how much we do have elsewhere, all that are different. And our practical knowledge on the subject, how we do practice, that's all different. At the end of the day, that's 60 marks that we are going to score. That's very important. So you have the screen like at each stage you can review. Say maybe halfway through, you can review how many questions you have answered, how many questions you have left, and how many of that you have answered, you have kept it for review. So review in the sense at the last moment, some 15 minutes or so you can allocate and check twice, thrice, whether it could be right or wrong. And only when you are feeling confident there, you can continue to take it up under this. Otherwise, you put it under a case of do not answer. Do not answer. But keep it under review. So this way, you have to leave, and your marks will be only from this area. So your marks will be +1 or +2, depending upon in which category the questions are answered. If you are questions were all under case studies, then it is +2. And if it were to be in other category, it will be +1. And negative marks of 0.25 will be losing. So therefore, every wrong answer, we don't lose quarter of a mark. We lose that mark as well as we lose from other good questions that we have answered 0.25. So it is 1 1/4 we lose. So therefore, if you look into people who have shared their experience, they've come close to 60 and they've lost. And myself also an example in DISA, we had this problem. I scored 6 marks less. 6 marks less. So, but I did not have the idea of leaving some questions and answering only for 100% confident areas. So thereby I've just lost many. So out of 100, in my case, I've attended 84. In 84, 22 went wrong. 22 went wrong, but still I could get 63. Still I could get 63. And I would like you people to go prepared, and you have NISM So practice, there are only 105 questions, only they recycling it. But that experience of taking up mock test before going to the examination is very, very important. That screen comfort, what you have seen in the mock test is what you would be finding. And it will be very nice that you classify the questions in this category and score minimum 60. That is what it is all expected of. And this way I would like to take up to the next stage of our discussion. That is a main area. Before I could just say anything about that, briefly introduce what is it you are doing and from which place you are into. That is your base. Unmute. Firstly, I could see Mr. Shiva there.
Yeah, good afternoon.
Good afternoon.
I'm Shiva Kumar. I'm basically a chartered accountant and a company secretary with about 33 years experience. I've been primarily in industry. So I work for a pharma company.
Okay. Based at?
Chennai. I'm based in Chennai. Yeah.
Chennai, okay. How about Ashok?
Yeah, Ashok here. I'm based in Bangalore. I'm a CA, passed in 2004.
I'm not, your voice is not audible.
Ashok here. I'm based in Bangalore.
Bangalore.
Yeah.
Okay.
I'm a chartered accountant. I cleared in 2004. I've been in industry primarily. Last couple of years, I have set up my practice here.
Okay. Okay. Sundar Rajan?
Sir, I'm Sundar Rajan Associates, Nungambakam. For the benefit of others, I know you, you know me. So I'm just telling you. In 1986 to 89 is my batch. So I qualified in 1990. So 30 years of practice. Just completed 30 years. So I'm just into this.
Okay. So why you people have just gone, that is got into this course for which you don't have to explain. So I could easily sense that. See,
The
for me, it
point
was
is,
only accidental. I never.
No, it's not the sheer accident. Already we have valuers in our office, no. But the point is, I want to go for this, the firm to be empaneled. If the firm has to be empaneled, we need to have at least 3 partners doing the valuation. So I took up the responsibility from my side. Just let us have one more valuation. We do the valuation. One person is there already. Vijayaraman is RB. He does it. But anyway, I'm also joining the bandwagon. That's all.
Okay.
Okay. Thank you.
Right. Anybody else there?
Yeah, myself is R.K. Raman. I'm practicing as a CA since 2004 in Delhi.
Okay.
Prior to that, I practiced as a cost accountant for 2 years. So total number of practice almost 18 years in the field of taxation, auditing, finance, etc.
Okay. So anybody else? Shall we start our class?
Yeah, hello.
Right. Hey, anybody there? Yes, yes, please.
Yes, sir. This is Avinash Podar. I'm practicing, right now I'm practicing as an advocate. I practiced as a chartered accountant for 17 years. I qualified in 2000. I'm staying at Gujarat and representing before the NCLTs and High Courts.
Okay, good, good.
So myself, Anuj Dang, I'm based in Delhi.
Anuj. Yeah.
I'm a qualified accountant, qualified in 2010. And recently I stayed a CA now.
Okay, we will start. Say, nice to get associated with you. So now let me just start the discussion. So I use the same slide what I use it for my classroom. So therefore, at the top you would be just finding the coaching class name. So just ignore, concentrate on the matter only. Are you seeing that screen?
Yeah.
Yeah, fair value measurement.
I'm not able to see that.
Okay, I will just see that. Are you seeing that?
No.
Are you seeing?
Normally, Mr. The what page we are seeing is that you are given indications, no, how to write the examination. That page is there.
You're seeing only that. Okay. So now let me just start this discussion. Are you seeing the screen now?
Yeah, now we can see.
Yeah.
Say whatever I'm using it for my CA final class, I'm just using it. Say basically as how Ind AS is being used in financial reporting. And in that, in our syllabus, we have 4. First one is fair value measurement. Second one is business combination. Third one is impairment of assets. And last one is financial instruments. So the vastness of financial instruments, accounting standard is so big, and we find in our RV material, it is not taken up at all. So practically the questions are confined only to 2 out of the 4. Fair value measurement and 103 business combinations. Okay, of that, firstly, we are taking up on to Ind AS 113 fair value measurement. So fair value measurement where it focuses only on balance sheet items and it is not focusing anything on income statement. So therefore, balance sheet items would mean we have assets, liabilities, and own equity instruments. So you don't have to show any anxious moments of noting down any of these items. I will share with the RVO. You can take it from them, and you just give patient attention to the discussion. That is more than sufficient. And these the areas that we will be discussing today. That is for this particular session. You can get 6 marks or so in the main examination out of 100. Okay, this is the course content, and this is what we will be taking up for discussion. What is the role of Ind AS 113? The role of Ind AS 113 is that it is not having a specific thing like recognition, measurement, and disclosure. Okay, so it is something like a dictionary where judges will normally be referring for a particular term when it is not defined in the particular act. So as how dictionary is sought after by judges in decision making, same way, if you want to interpret something about that is about fair value in other accounting standards, the place where they got to look out for is this particular accounting standard. So therefore, instead of using the term as dictionary, I've said as you can call it out as a lighthouse. So that is the sort of importance this accounting standard has got. And by itself, it is not mandating as how it is to be reported and what are the disclosure requirements. So what is fair value and how it is to be done, that is all they are given in 113. Then we would like to know what is a fair value. Anybody who can just throw some light about fair value from your understanding?
It is some the price which is available in the market, like the at which we can sell something.
Okay. So correct. In order to make it a little more clearer, I would just say normally in taxation we used to have in transfer pricing called as arm's length price. So whenever there is a transaction between two related parties, so we would normally be concluding that the price what they have arrived at may not be arm's length price. We would like to know what is the arm's length price. So what we expect in such case is that unrelated party relationship is what we want. That is, there should not be any relationship between buyer and seller of the item, and it should be in an orderly form, and it should be done in an active market, and there should not be any force or there should not be any compulsion into tackling that particular transaction. So I would just bring out a comparative statements. Items dealt in these two columns are assets, liabilities, and own equity. And when the parties are related parties, the other one being unrelated party, the price we would normally be concluding as not at arm's length price. The other one is at arm's length price. So what is the comment that we would be making? Naturally, not at fair value. The other one will be at fair value. So from this, what is the conclusion that we would be making? Arm's length price is more likely to be the fair value, isn't it? Then one of the very important MCQs in which the important terms that they choose. So they would just give some references about it is actual price, it is estimated price and all that. So you got to be very careful. We may feel that things are very clear to us, but under examination conditions, the problem is that we might choose wrong answer. So please be careful regarding the words that they are using. And we might have done many such problems. In fact, in my session, they have asked a question on income tax on 80 GG. See, not very frequently visited one, but since I've taken class for intermediate level students for taxation, I could easily connect that very recently that per month of 2000, they made it as 5000 per month. And I engaged in computation. So why I'm telling is that though we might feel that something which is very easy and we would have the confidence, but particularly when a question is to be answered, we have got to be a little more careful. So therefore, the class is going to be very interesting, and I will definitely be telling you as which is very important, where you got to be picking up your. Are you seeing the screen? Estimation of price.
Yeah. Yes, sir.
Right. In an orderly transaction, each one of those discussion is going to be potential 1 mark that you would be getting. So where that 1 mark you would be getting, nobody would be knowing that every part of our discussion is going to be very, very important for securing that 1 mark. In an orderly transaction, to sell an asset or transfer a liability. So sometimes they may say to purchase, to sell, exit price, liquidation value and all that. You got to catch with that appropriate term on try. Okay. So please just be careful between market participants and at a measurement date. So this fair value can be done at any point of time, need not necessarily be at the end of any financial year or so. And the next one is under current market condition. Under current market condition and at exit price from the perspective of the market participant that hold asset or liability. So these are the very important terms that we would be using to understand what is a fair value. So number one, estimation of price in an orderly transaction to sell an asset or liability between market participants at a measurement date under current market condition at exit price from the perspective of market participant that hold asset or liability. From the owner's point of view or from holder's point of view, it is only the exit price. And that is what we take it up as fair value. It is not actual price, it is only estimation of price. And it is not any transaction in an orderly transaction. Why orderly transaction? So if you show urgency where you want to finish the transaction of much earlier, you have got to pay premium for that. That can never be a fair price. So in an orderly transaction, and to sell asset or liability, not the purchase price, it is only sale price. So all these are very, very important. So please be careful. It might sound easy. Under examination conditions, they might just give it in such a resembling form. We might choose the wrong answer. So I will give you one more example also. A person handled the class on financial management for a very, very long time. I would say 20 plus years I've been taking for financial management. I was about to commit a mistake. I will share my experience, so please hear me carefully. So it might sound at the very initial stage, even when I was attending to the class, I was just feeling that sort of precautions conveyed by a few faculties. I was just feeling that it is something like spoon feeding and all that. But after taking up the examination, then I just felt whatever reference that people have just made was very, very important. And what question they've asked? It is on financial management. If IRR is greater than cost of equity, then the project would be A, positive, NPV will be positive, NPV will be negative, maybe positive or negative, depending upon other scenario, and it will be 0. So immediately on reading, when IRR is greater than cost, I have not read the remaining portion. I clicked positive, but I had the mind to look into what other alternatives that they have. They said it could be positive or it could be negative, depending upon other cases. I was just laughing at that. Then why that sort of question, why that sort of answer that they have given? Then I looked into the question. Question did say this reference, IRR, when it is greater than cost of equity. So IRR should be compared with overall cost of capital and not cost of equity. IRR should be compared with overall cost of capital and not cost of equity. But in that particular question, they have used cost of equity. Then I have erased that particular answer and chosen the third question. And thereby, I would strongly recommend you people to read the question 3 times. Give a lot of importance to each word. They may use double negative, they may use negative, they may use terms like least, most. And therefore, success is not the knowledge tank that we have. It is all the application under examination conditions that is holding key. So in fact, before taking up the examination, many people told that in third or fourth chance you will clear is what elderly person said. And I felt, what is this? Why is that this person is discouraging? And I cleared in very first chance. First thing I called that gentleman. So people have their own feeling that this is going to happen and all that. So please be careful. Read every other alternative solution that you have, and that might prompt you to read the question fully. So read the question fully, read all the options, even if you know, read all the options and take your time and then click. Because if that preparation 1 hour and 30 minutes will be more than sufficient with ordinary level preparation. Other 30 minutes you spend time for checking up the review and all that. So I thought I will just, very recently I've cleared and I've held a session for my batchmates as how to take up, and that is what I'm sharing. Fair value base. So here, an item that you take up for the purpose of valuation could be identical, could be similar, and it could be unique. So if it is identical, so quite naturally, we will take up what is available in the market and take it up as fair. Market is the base. If it were to be similar, similar means it is not the same, no? So when it is not the same, quite naturally, you have got to make adjustment for that. One moment. So similar would mean we are expected to bring about adjustment for the changes. So therefore, you have got to capture which you consider as adjusting for bringing value, and which we call it out as maximize the use of relevant observable input. So all of you, please be careful. The very important matter that you will come across in majority of the discussion is this portion, maximize the use of relevant observable input. Okay. Then when you don't find them as identical or similar, which will be falling exactly on others category, you have to use independent analysis. You have to bring out assumptions, and that is what they say, minimize the use of unobservable input. So let me tell you, this is going to be a strong possibility of examination questions. So here we will have 3 layers. So layer 1, layer 2, layer 3. Or you can say tier 1, tier 2, and tier 3. Or level 1, level 2, and level 3. So level 1 will come under identical category. Level 2 come under similar category. Level 3 others category. So the question may carry an item which had fallen in level 1. Which one will be taken up as the base? So they will tell us market base, maximize the use of relevant observable input, minimize the usage of unobservable input, and some other item. Out of 4, 1 can easily be knocked off, which may not be relevant. So in many of our discussion, we will have this maximize the use of relevant observable input, because very rarely you find identical. So in majority of the cases, it will only be similar. So read the question carefully. If it were to be identical, there is no necessity for you to take up maximizing the use of relevant observable input, nor you would take up minimizing the use of unobservable input. So you should only be taking the first one. So I got to be very careful when you read the question. Okay. Then fair value shall be assigned for asset or liability, and fair value shall not take into account restriction of the entity of the use of the asset and the liability. What do you mean by that? So certain, or I will put it like this way. If a director is holding some quantity of shares, he is restricted by SEBI and as per the listing requirements not to sell and not to trade, not to mortgage with the shares that he is owning. And definitely shares which you don't carry that restriction will have a price. Shares which are having some restriction will definitely be valued a little lower. So if you are assigning a fair value for the shares, which one of the two we are expected to take up? So would you take into consideration the restriction that particular entity has got onto that particular asset while you value? Answer to that question is that ignore those restrictions and assign fair value for the asset alone. This is what accounting standard is communicating. So investment held in subsidiary company, it is typed wrongly. Subsidiary company by a parent cannot be sold immediately after the IPO of the subsidiary. Fair value shall be applied on the investment as if shares can be sold immediately. The lock-in period restriction shall be ignored. Fair value of the shares without restriction is expected to be greater than fair value of the shares with restriction. Consider the fair value of the shares without restriction for fair value purposes if investment is held by the parent. So this is very, very important. So if there were to be any restrictions, ignore that. That is entity-specific restriction, and it is not restriction on the asset itself. So you got to be very careful with assigning value. And certain accounting standards may not have this application of 113. So certain accounting standards by themselves are having fair value inbuilt. Ind AS 2, inventory. So what is that? We do have this cost or NRV, whichever is lower. And impairment of assets by itself has got its own fair value computation, where you have when carrying amount is greater than recoverable amount, where the recoverable amount is computed as higher of the two. Those two are value in use. The other one is fair value less cost to sell. So every accounting standard, when they have their own fair value measurement, they don't look for Ind AS 113 for any sort of application, and share-based payment is one such. And Ind AS 116 leasing also has got their own fair value base. So this is something to do with where Ind AS 113 will not be applicable. They might just give these accounting standard numbers. You have got to remember that. So fair value concept in those accounting standards are different, and it requires 113 has got no role to play there. Shall we proceed to the next one? Is fair value to be invoked only on a balance sheet date? I've already answered to that question. The answer to that question is no. So can be invoked or used on any date. for that matter. So that day shall be referred to as valuation date or measurement date. This could also be a question that they would be asking. What is the name of that particular date? They might just give the choice. So you got to be very careful. You can call that as valuation date or measurement date. Now, this is the definition of fair value. And whatever I've just given in the first few slides, they're all very important terms, but this is what you find as a definition. Can one of you read out this?
Fair value is the price to be received to sell an asset or paid to transfer a liability in an orderly transaction between market participant at measurement date.
Right. Thank you. So some amount of energy I thought I will just save.
No.
Because today it's a fasting day for me. So I just wanted to save energy. Already in the morning I had class. What is to be understood for market? See, generally we use a term as market. What is it we consider as a market? There are two types of markets that they refer. One is principal market, where the item is being dealt in highest volume and where activity is at a very high level. The other one is that most advantageous market. Okay, this is what they communicate about what is a principal market. And if you don't have principal market only, you got to approach for most advantageous market. Okay. So since our discussion is on to other accounting standards also, we will just go a little fast. So in fact, beyond this class, if you have any doubt, definitely in some of the other slides, I will share my number and my email ID. You can definitely write to me. Okay. So there are two types of cost that you have. One is the transaction cost, the other one being transportation cost. So in CA final paper, we used to have a lot discussed about this. So just observe this. In this particular NISM examination, they are not asking that. But since I'm using that CA final material, I'm just showing it to you. So transaction cost in the case of principal market is to be ignored to arrive at fair value. What do you mean by fair value? It is an estimated selling price from which we are expected to deduct cost. What is the cost that we will be deducting? You deduct only if it were to be a primary principal market, deduct only transportation cost and please ignore transaction cost. In the case of most advantageous market, please deduct both the items. This is a direction given and there is a logic behind these treatments that we have. Time is not sufficient, so I will just make only a reference and please follow the one. And one more question, potential question that you can expect is in the case of assets where you classify them into two as financial and non-financial. In the case of non-financial, methods are a little different. So for land, building and other properties, you use fair value, and in that you have highest and best use, popularly known as Habu. Habu is what they just call highest and best use. They may ask a question, Habu, in which of the type of assets it is used? Financial asset, non-financial asset, then they will be asking intangible asset, and they would ask some other current asset, something like that they would be asking. So this Habu is closely associated with non-financial assets. For financial assets, Habu is not used. Highest and best use. What is highest and best use? It is a fair value measurement exclusively applicable for non-financial asset. It indicates the ability to generate economic benefits by using it or by selling it. So this is what in Ind AS 36 they refer something about value in use or fair value less cost to sell. So supposing an asset is there, so you can definitely be one of the decision maker for that matter. When an asset is being held, what for we will be holding it? Only for generating future economic benefits. And we will assign a value for that. The other one is that if I dispose it of, how much value it will possess. We will compare these two. And whichever is higher is what we normally be choosing. And that is what you have it in accounting standard Ind AS 36 value in use, or fair value less cost to sell, whichever is higher will be taken up as recoverable amount. That is what they are indicating in this case also. Okay. So all these will have some logic, or I would say must have a logic. We don't have that amount of luxury for us to go into detailed discussion. I'm just highlighting the very important points that we have got to keep in your mind before we could take up something on MCQ. Definitely, as part of our discussion, MCQ will be taken up. Non-financial assets do not have frequently traded market like financial assets. Best possible use may be different for each entity. Every entity may have their own ways of using a particular asset. One may be using it extensively, the other one may be using it sparingly. So definitely, best possible use can be different for each entity. As I told you, it all depends on the market participant, and restriction in the specific market regarding the usage shall be ignored. This is what I was just referring about. So you take the full potential of the asset for valuation. Restriction on that asset you may simply ignore. And in the process of getting highest and best use, we don't have to exhaust all possible uses. So the present use can be considered as highest and best use. In the absence of potential best use, which is not easily available, would mean the current use itself will be considered as the best use. And one more important thing is that we should take into consideration physical, legal, and financial use in measuring fair value. Is fair value applicable only to assets? Answer to the question is no. We can use it for liabilities as well as for own equity instruments, especially in the case of merger, demerger, and all that. We may use this for other liabilities, that is liabilities and other equity instruments. Okay, shall I proceed to the next one?
Yeah.
What are the occasions for valuing liabilities? That, of course, I told you, merger, demerger. Those are the times at which we take into consideration for the purpose of bringing out how this consideration is worked out. And that is going to be the basis on which the goodwill or bargain purchases will be worked out. The only precaution is that the liability and the other equity instrument shall be outstanding on the measurement date. So what is likely to come as future liability or future equity instrument will not be taken at all. So it should be live and it should be outstanding on the measurement date. That's very important. That's a matter of caution. Classification of liabilities and all that, quoted, then unquoted. How quoted could be a liability? A bond is a stunning example for that, which is a quoted liability. I issued a bond. Naturally, it has got a market value. So quite naturally, we should take into consideration liabilities are of two types. One, over the counter, that is bank loan and all that. The other one, open market tradable liabilities such as bond and other securities. So in the case of unquoted one, we are expected to maximize the observable inputs. Once again, I am just coming back to the same matter only. If it is identical, you take market. If it is not so, try to bring out observable inputs, because that is going to give greater amount of fairness. And in the case, try to minimize unobservable inputs. Okay, this we will quite frequently be using. What is an observable input? Even in the case of transfer pricing and all that, whatever item that we export or import may not match with the other item that you have. You make those changes and bring about your value. That sort of thing only we will take it up as observable input. Market data that are publicly available about events and the transaction. Unobservable assumptions that we make while pricing the asset and the liability. So here we are expected to use income approach or market approach. The next item is that, is the fair value to be taken at gross or net? So answer to that question is always net, because immediately your mind will flash about Ind AS 2. We take up cost or NRV, whichever is lower. And even in the case of Ind AS 41, when we are talking something about cattle stock to be valued, it is all valued at fair value less cost to sell. So in the vast area of Ind AS, they have taken up fair value only on net basis. Okay, so these are the conditions that we have to take it up on net basis. And though we have just conveyed fair value would involve the estimated sale price and all that, sometimes we may use purchase price also for fair value, that I will tell you. So on vast majority, we will use only sale value, sale price. Sometimes we may use purchase price also, I will tell you that. Fair value at initial recognition, generally at exit price, covers transaction and asset and the liability. In the case of exchange transaction, this is the place where I was just referring about. In the case of exchange transactions, we are not expected to take up exit price, entry price. Purchase price is what we are going to take up. Price paid to acquire the asset or receiving the liability should be taken into consideration. This could be a question in the main examination. So is it always exit price? Majority of the case, exit price. Sometimes you may use purchase price also when there is an exchange transaction. So assumptions in making fair value measurements are parties are unrelated. There is no panic or distress sale, no duress, no coercion. Measurement scales are same with respect to rights and privileges. That is, when you are taking up two comparables, same right and privileges should be there for identical thing for observing that price. When there is a change in the privilege or the right, accordingly we have got to add premium or discount for the privilege not there. So that we should take into consideration. That right could even be without rights, without bonus, etc. Market should also be the same. What if fair value and the transaction price are different? So whether we should take up transaction price or fair value only we should take into consideration. So more so in Ind AS 41 we used to give emphasis for that. What is that? If a particular company where they produce dairy products and they would be buying at all points of time some cattle that they buy, some cattle that they sell. So if that be the case, what is the price at which it is to be recognized? And when cattle are reared for their own production purposes, that is for agricultural produce purposes, so definitely when calves were born, whether they are fit for recognizing and measuring and all that, answer to that question is yes, it is in the affirmative. You have got to pass journal entry for that. Then at what price you have got to do? So there they say fair value less cost to sell. If I sell this, definitely there will be fair value for that. Sale price will be there, estimated sale price. There could be some cost that I would be incurring. So that is a price at which it should be recognized. So having said this, when you find I need to buy some cattle, each cattle, say for example, cow. So I decided to buy at, so fair value is 70,000, whereas I paid 72,000 rupees. Transaction price may be different from that of the fair value. Or my transaction price may be 67,000, whereas it could be 70,000 as the fair value. So what is the value at which it should be taken up? It should be booked only at 70,000 and not at 72,000 rupees, nor at 67,000 rupees. Then people will ask, what is that difference? What is that we will be doing? So there is a particular account that you got to develop. So fair value gain or fair value loss on account of initial recognition. That is what we are expected to take it up. Okay. So record only at fair value. Difference shall be taken to profit or loss. So example that I've just given is that Ind AS 41. So this is what we have it in the case of Ind AS 113. Now, MCQ on this I would like to take up now. Shall we start?
Yeah.
Say now, from now on, it is question and answer session. We will run through the question I've just got from, what should I say, database. So to create that database and the material, I spent 2 days, and everything is converted to PDF, Word, PPT and all that, because unless I have all the material, I just don't want to start preparing. So this IBBA material, which has got 267 pages or so, that once I've read fully. So I should just have a feel, no. So even when I just don't clear, at least my work I should have just done well. So for that purpose, I took one material and I've studied completely. Don't ask me a question, anything about any question. If you ask, maybe some areas I might just even go wrong. So what I'm trying to say is that have one particular, there is book, whichever book that you take it up, read once at least. And definitely I would just say on many of the such people who have done that, say I took a lot of tips from others, and all of them are very, very important, which I thought I will just share with you. And there is a very high prospects of that reading helping under examination condition. It helped me. Now let us just start with this MCQ. Come on. Please answer to this question.
All of the above.
Market specific measurement. Fair value, yes. Market specific measurement. It is not entity specific. So if entity has got some restriction, ignore that. Sometimes asset may have some restriction, ignore that. So please do consider market. So that is what you do have. So please be careful. Okay. I will share all the material. Please just don't have any anxious moments for quick noting and all that. If you are capable of taking running notes and all that, nobody will stop. So you can just try that. Come on, please fill the blank.
Fair value.
Fair value. Fair value.
Good. Fair value.
Market participant. Market participant.
Because there are 3 market, no. So the moment you convey it, you do not know whether it is B, C or D. You put your answers like A, B, C, D. It's very easy. B. Correct. This is what I was just telling. So whatever you hear, whatever you study, sometimes we feel very happy under examination condition. The happy feeling only I am just sharing. Once go through. So this the topic or the act which I felt it's really boring and all that really helped me. The FM area, which was considered to be my prime area, which really caused some anxious moments. A combination like that. So go through once.
Price paid and also sold. Price paid when order.
Come on. So one of you please read, because it is a little lengthy one.
Which of the following is the characteristics of the fair value? First one, it is a price paid when the asset is sold to related party. Second, it is a price paid when the asset is sold in an orderly transaction. Third, price at which transfer of liability would take place between the market participant. Fourth, price at which the transfer of liability would take place between related party. I think it is second. Orderly transaction.
And who is this?
C.
Who was reading it?
R.K. Raman.
R.K. Raman. See, only one precaution, Raman. So what you do is that do not conclude fast. The same tendency I was having when I was attending to the class. So within that 1 month, I've what should I say, brought about a lot of amendments because of that study only.
It is C, 2 and 3.
Huh?
It is C, 2 and 3.
C, 2 and 3. That's correct. That's correct.
3 is also, yeah, 2 and 3.
Because first one you should ignore it. Why? Because it's sold to related parties, what they said.
Correct.
And the price at which transfer of liability would take place between related party, item number 4 also they have just indicated. So you can say by looking into this 1 and 4 to be eliminated, definitely B and D will be eliminated. Now the question is between A and C. A is item number 2. Orderly transaction is correct. The other one is that price at which transfer of liability would take place between market participants. That is also correct.
Correct.
So it's better that we spend some extra bit of time to read and understand rather than rushing. The same tendency I had when I was taking up DSA examination. So now I'm going to take up that DSA examination. November, when they are going to hold, I do not know. They have not made that announcement. It's only for their students' examination they have announced. So I learned a lesson. I burnt my fingers that way. Not in terms of money, but in terms of time. I should have cleared in the very first chance. So whatever mistake that I have committed, I don't want anybody to commit that. That is the reason as why when I am telling, it might sound a little preaching. So please just ignore that discomfort. Take the juice out of that. Come on.
D.
Huh? D, huh?
D.
Correct. D is correct. Because exit price is the one that
orderly transaction.
Okay.
It's a sale in current market condition.
B.
Huh?
B for boy.
B for Bombay.
Sale in.
Okay. Correct. The standards will not be that difficult and all that. Let me tell you, easy to pass. Easy to pass, but you should not be rushing.
B.
7.
Oh, all of the above. All of the above. Oh, sorry.
Oh, it's only depends fair value.
B. Only B.
Only B, huh?
Yeah.
Yeah, no, it is defining fair value, no.
Yeah, defines fair. That's the confusion. Because it does not give the disclosure. C is not there.
C is there, but they are not mandating that it should be disclosed.
Yeah.
Disclosures there, measurement, how it is to be done, but they don't mandate. So this is the one that I got to do. They don't mandate. There is disclosure, mandates and all that. We do have it in the respective accounting standards. So answer is all of the above. So what you have rushed for this question is correct, in fact. So can one of you read? See, can you take turns to read?
Ind AS 113 applies to A when another Ind AS requires or permits fair value measurements or disclosures about fair value measurements. B. Share-based payment transactions within the scope of Ind AS 102. C. Leasing transactions within the scope of Ind AS 17. D. Measurements that have some similarities to fair value but are not fair value, such as net realizable value in Ind AS 2 or value in use in Ind AS 36.
B. Answer is B.
Points we have discussed. Please understand, I am not taking up directly MCQs. We had enough introduction and then taking up. So maybe this
answer is B.
Coming up, that should be 116. Accepting that correction, because when they have prepared, it was not 116 was not there. So answer to that question is A.
All other things have an independent standards.
Exactly.
A is the same.
Exactly. So this is what I'm telling you. You have enough introduction. See, let me also tell you one more secret. Say when we have office commitment and all that, cancel all our works. But at one point of time, we feel that this I have not studied, that we have not studied. So when you start doing it, where from you have to start, where to end will be a problem. I had this Transfer of Property and Stamps Act, Stamp Duty Act, I could not read. I could not have any idea about that, except for attending to the class. In between, I have not studied. What I did is that I had this ACS Institute study material. My daughter cleared intermediate and final she was having. She's a chartered accountant. She's married and all that. So her book was there in her shelf. I just picked up and looked into the last few pages of that chapter, looking only for some summary. This is not the first thing that you got to do. At the last moment, lender of last resort, like I read 3 pages of that. What they have just considered, what is transfer of property? Okay, this. And this is what they have given in stamps. Okay, closed it. So 2 questions from that summary I got in the main examination. Through that I could just clear. So it is not possible to study all act 100% to take up the examination. I'm not just giving you a license to go through summary alone to take up the examination. Do not misunderstand that. Sometimes 1 or 2 you might just miss. Take up that summary, study well, and that summary itself will give you an overall idea. It's not that we have just come to this level without any knowledge. Definitely we have some of our intelligence, wisdom, whatever God has just given, it is very much there. So definitely we will be in a position to push for certain acts we could not complete. So please be careful.
Highest and best use of
Please read out.
The highest and best use of a dash might provide maximum value to market participants through its use in combination with other assets as a group, as installed or otherwise configured for use, or in combination with other assets and liabilities. Example, a business, a non-financial asset, technology asset, financial asset, intangible asset.
A.
Non-financial asset. Good. So the thing is that class got over and we are taking up MCQ, no problem. But by the time you get a slot, there will be a time gap. You might have just missed out. So please be careful. Keep studying until you get your slot and attend to that. Next one.
Somebody reading?
Please. One of you, please read.
Under acquisition, accounting fair market value will be the A, market value, B, cost paid for asset, C, best price, D, sale value.
It's best price, C.
Sale value.
No, cost paid for the asset. It's purchase, no? Cost paid for the asset. B.
B.
In acquisition accounting, fair value of quoted investments should be based upon market price, cost paid, best price, sale value.
Market price.
Market price is correct because they have used the term quoted investment.
Quoted investment.
So you will have in many questions some indication in the question itself. That is the reason as why I used to tell. Read the question after reading the alternatives also. Say some people read the question 2 times, 3 times. I used to tell this way. Read that. Read also the answer. Once again, read the question. So from the given answers, you will be in a position to connect with the question. See, these things happened under examination conditions. For me, I am very fortunate, I would say.
On consolidation.
It's a simple question only. Come on.
On consolidation, total of fair value of assets less than purchase consideration is goodwill, value of business, capital reserve, profit. Goodwill.
Goodwill. Correct.
Disclosure requirement under Ind AS 113 does not apply.
All the above. D.
A.
All the
Share-based
above.
payments, leasing
All the above.
transactions, measurement that have some similarities to fair value but are not fair value, such as net realizable in Ind AS 2. All of the
All
above.
the above. Because already on the similar lines, we had this question. Okay.
Correct. Correct.
Yes.
The
Please
price in the principal or most advantageous market used to measure the fair value of the asset or liability shall not be adjusted for A. Transport cost, B. Installation cost, C. Transaction costs, D. All of the above.
C. Transaction cost.
Hmm?
C.
C. Transaction cost. Correct. Please.
The dash in an inactive market provides the most reliable evidence of fair value and shall be used without adjustment to measure fair value whenever available. Market price,
Market
price,
price.
sale price,
Market
cost.
price.
Correct. Say market price is correct. How is it, Raman? How did you tell that it is market price? Can
Sir,
you
it's
tell?
an active market. It's an active market. So
Okay.
active market means there is some kind of genuinity in the market.
It's a principal market.
So why it cannot be quoted market?
Quoted is always influential price.
Okay. See here, what they've used a term is without adjustment. That means it is a level 1, market price is the base. Okay.
Yeah.
So in a way, quoted price is also closer to that. Under examination conditions, when you have two which could be very close, the one which has got a little extra advantage, that is to be taken up. So here it is like that. So sometimes people might just be taking up quoted price. Here we are not expected to take up quoted price. It is only the market price. So please remember that. Shall we proceed?
So in other words, if any of the other three prices are there should be an adjustment which will be required.
Yes,
right?
Exactly.
So either B, C, or D, it will be requiring an adjustment and a question on a different footing.
Yeah. See, there will be word play, there will be English play, memory play. A lot of things are there in English. Shall we proceed to next?
Yeah.
So in this particular case, 15B is what is correct. That is the reason as why to Raman I was just asking this question. Why is that you have chosen market price? I have not yet concluded, so please be careful. When it is when you are finding two resembling, when they are very close, you have got to give them a lot of consideration. Why quoted price is being taken up is because of the active market. So I do not know as whether I have impressed for you as market price or quoted price. So I was just asking on what basis you said as market price. So please just have this particular term in an active market. Quoted market is where you just get in active market. That is only from active market where you have large number of buyers and sellers, where a lot of participants that you have. So quoted price would be the most appropriate price. And it is not market price. Market price is also closer. This is what I told you. You got to be very careful in bringing out that selection. Shall I proceed to the next one?
Yes.
Yeah.
Come on. One of you please read out.
The dash uses the discount rate, which is derived from the observed rates of return for comparable assets or liabilities that are traded in the market. A. Discount rate adjustment technique. B. Expected present value technique. C. Cash flow technique. D. Present value techniques.
See, this part we have not made as a discussion in our classroom. That is in our theoretical discussion. But for this, discount rate adjustment technique is what we are expected to use. So therefore,
A will be the answer.
A is the answer. A is the answer. Come on, item number 17.
interest rate swap as a dash input would be an adjustment to a mid-market consensus price for the swap developed using data that are not directly observable and cannot otherwise be corroborated by observable market data. Level 1, level 2, level 3, level 4.
Level 2.
Not able.
See, first thing is that firstly understand there is no level 4.
Yeah.
Okay, you need to eliminate 1. And when it is identical, it is level 1 where market is quoted and all that. So where things are not identical, when it is similar, you got to maximize the observable input. When you don't find them and when it is unique and it is over the counter, then it is level 3 where you got to minimize the unobservable inputs. Okay, this is what I've just conveyed. So from the discussion, you can understand interest rate swap is dash level of input that you got to bring about. Come on. This is the area where you need to think and apply. Come on. If anybody who is just answering to the question, please also convey the logic on what basis you have concluded that it is A, B, C, or D. Come on.
Level 3, sir. Question number 17, sir. Level 3.
C.
Is it C?
Yeah.
If it is C, can you tell why it is C? On what basis you have concluded that it is C? Because for the other problem, when Raman was just telling, I was asking why it is like that. So you need to tell a little on what basis you have conveyed. Because noting down the answer is one thing, but we should understand, okay, this is the logic.
So because level 1 is both an observable, has a market data and quotes are directly observable. In level
Your
2,
voice is not that clear, though it is giving us a good sound.
okay, in level 1, we have a market data and directly observable quotations. And level 2, we don't have directly observable quotes, but we have a market. And level 3, we don't have a market and we don't have quotes. So an interest rate swap would not have.
You are correct. You are correct. Your conclusion is correct. Basis on which you concluded is correct. So you don't have a market this way to corroborate. So therefore, there is no identical item that you have. Level 1, level 2 not applicable. Level 3 is applicable. Correct. Come on, 18. Please, one of you, please read out.
Dash is an adjustment to exchange trade pricing for information. A level 1, B level 2, C level 3, and D level 4. Exchange rate trade pricing.
Come on.
Answer B.
Why? So all of you, whatever answer that you are providing, please tell with reasons. See, we like a book, no. See, when they provide with reason why it is correct, we just assign better attachment towards that book, no? Isn't it? Likewise, I'm asking. You may be right, you may be wrong, but yet there will be some logic.
Because level 2 provides a similar item and adjustment on bringing value. There's some adjustment made to bring to the value.
Okay. So you are giving importance to the word there as adjustment.
So this is a similar thing, not a.
Okay. Why not level 1?
There's no adjustment.
There's no adjustment required in that. It's very identical.
No, it's only an estimated price that you are taking up. So giving an exchange or trade pricing for information is an adjustment would mean whatever price at which it was sold, you don't take it up directly. So you take into consideration other adjustments also in order to arrive at the fair value. So the transaction cost or transport cost. So all that we take into consideration. No, it is not plainly 100% we copy paste and do. So here there will be some amount of adjustment that we do, but it is level 1. We take 100% that way. Level 2 is where you make those changes. For example, I told you in transfer pricing, one item is being sold with maintenance contract, it has got a price. Another one is sold without maintenance contract, it has got a different sort of price. So we are bringing out that sort of adjustment, and that is not the one that I feel it is intended. It is level 1 there. Okay, shall I proceed to next? So I take into consideration your logic also is sound, but it is level 1 in this case. Come on, 19. Please, one of you please read.
To account properly for dash, several adjustments are necessary.
Almost I have given you the answer for this
A.
question in the last question itself.
It's A.
Yeah, correct. See, we bring about several adjustments. Just because adjustment is made,
So
you cannot
in the
tell
fair value.
that it is not to be taken under level 1. Shall I proceed?
Yeah.
C. Answer C.
Answer C. Say, let me also tell you, say from a good source only I got this, for my studies also I took. Never this question will come in the main examination. Not, I don't have any grudge with this question. But prior to taking up this examination, I had a liking towards this sort of question. I will normally be selecting C, and C will be correct. So what is that? Both A and B, and followed with none of the above. Out of, say, I would have just gone through some 200 MCQs of all topics together. And whenever this question is there, I will not even look into other options and all that. When I find C, both A and B and none of the above followed with that, it is mostly out of 2000, at least some 200 questions will fall under this category. And out of 200, 190 cases, C was correct. But in the main examination, not even one question I got in this category. So therefore, you just ignore that C and D. I mean, that sort of questions you ignore for your preparation. Because questions bank at which NISM is having is something new. So these sort of old books which carry this both A and B and none of the above will not be there at all. But anyway, for knowledge purposes, we got to go through. But don't expect this sort of question, none of the above, none of the below, either A or B. So they are very clear. At the very initial stages when they have conducted examination, they never had that question bank. Now, beautiful questions that they are asking. So go a little more prepared. Shall I proceed? It's both A and B only in this case. I don't have any grudge for these questions, but I'm just cautioning you. When you are preparing, there is a gentleman who sent me one PDF. During COVID times, you could not just buy. I took a printout from our office for that PDF. And 200 out of 2000 were all only this. Come on. One of you please read out. Question number 21.
Which of the following is an assumption of fair value measurement? That the transaction to sell the assets or transfer the liability take place either A, in the principal market for the assets or liability, B, in the absence of the principal market in the most advantageous market for asset or liability, C, only A, D, both A and B.
Right.
D. D.
Which one?
D. Both
for
A and B,
Delhi.
no, sir. Both A and B, sir.
Both A and B. See, they need not have given C at all. See, A is there. So sometimes we laugh at the question. We laugh at the question. Anyway, that's so. See, I've just taken up very sincerely their book for my preparation. I never thought I will take up a class like this. So, with one of my staff who was asking what job he has got, I've just sent him and asked him to prepare. So, last batch itself, I could have taken up even before qualification, but I had a suspicion of COVID. I was just coughing a lot by then. So, I thought we will not take class by then. So, now, after COVID, first session after qualification. Come on, please read. Item number 22.
Which of the following is not a characteristic of the market participants in the fair value measurement? They are not knowledgeable. Oh, they are knowledgeable. They are dependent on each other. They are not compelled to enter into the transaction. They are able to enter into transaction for the asset or liability.
So read the question carefully. Which of the following is not a characteristic of the market participants?
C. No, not.
So please be careful.
Not a character.
Huh?
Not a character, sorry.
That's what that's what I'm just telling you. Say, I may slip sometimes in Tamil.
No.
So most of you are knowing Tamil, I understand.
B. Dependent on each other.
I think it is B. They are not dependent actually.
Correct. Correct. B is correct.
B is correct.
It's not a characteristic.
See, this is what I'm telling you. These sort of questions are frequently coming. I mean, more in numbers you are getting in the bank. So please be careful. Okay. 23.
The fair value measurement of a non-financial asset considers the market participants' ability to generate economic benefits by using the asset in its commercial use, highest and best use, economic use, none of the above.
Abu. B.
Abu. B.
Abu. B. Correct.
B.
B. Answer is B. Non-financial asset.
I don't think so. You will do it very fast. One moment. Come on. 25. Please read out.
Which of the following is the basic assumption while measuring fair value of a liability or an entity's own equity instrument? 1. A liability would remain outstanding and the market participant transfer would be required to fulfill the obligation. The liability would not be settled with the counterparty or otherwise extinguished on the measurement date. B. An entity's own equity instrument would remain outstanding and the market participant transferee would take on the rights and responsibilities associated with the instrument. The instrument would not be cancelled, otherwise extinguished on the measurement date. C. Both A and B. D. Neither A and B.
Neither A nor B.
Entities own equity instrument.
C.
On the rights.
C.
C.
Correct. C is correct. This is what I was just telling. So on seeing C, like this sort of format, I normally chosen without even looking into what contents A and B were having. But whatever discussion that we have made, we were having that key word that we find in this case being remain outstanding.
Remain outstanding is critical.
Remain outstanding.
Correct. Remain outstanding.
Okay. So therefore,
sir, in the previous question.
What is that?
In the previous question, they are talking about fair value of a liability or an entity's own equity instrument. And it says the option A says the liability would not be settled with the counterparty or otherwise extinguished on the measurement date.
Ashok, I'm just your voice is a little jarring. I'm not in a position to catch you properly from the beginning. Sorry to say.
No, okay, sorry. No, they have used both fair value of a liability or an entity's own equity instrument. So this both A will hold good for both liability, because I'm a little confused with that the statement. The liability would not be settled with the counterparty.
So you mean to say that they should be under?
No, I meant to say it should be only equity instrument, because
both are expected to be outstanding on the measurement date.
Okay.
Correct.
Okay, both should be on the measurement day. It should be, say they are trying to test whether the participant had just gone through the text. Anyway, I'm holding on to your doubt. I will just review it, and maybe I will contact you on that.
Sure, sir. Sure, sir.
Question number 26.
Using fair value concept, company measure and report the value of certain assets and liabilities on the basis of their dash fair market value. A, actual, second, market, and C, actual or estimated, and D, estimated.
Fair market price itself is estimated only.
D estimated.
See, it might be, this is what you have once again a contest. Say it is not always actual. It is not always estimated. Therefore, it could be actual or estimated. When I was taking up that, I was just really stunned. I was just choosing only D. Actually, they have just selected C. The justification, what I found is that it is not only, if you select only actual, it is only actual. If you select only estimated, it is estimated. Sometimes it may be actual also would be coming up. So most probable answer people would be selecting is D. I've also done that. So, but in this case, I've just seen the justification, what they given is actual or estimated. So please be careful on this. Very easy question. Don't have to even read. I mean, loudly.
C.
B.
C.
Yeah.
Fair value accounting.
Fair value accounting only. That is why I told you. Because all through our discussion, because the title of this is fair value measurement, no.
Okay.
So see that we might just go wrong on the simplest one.
Yeah.
Please be careful. We will never go wrong there.
All of the above.
This question appeared in my chance. Now only I remember that. Very easy only, but I took extra bit of time to conclude.
B.
B is correct. Because fair value of liability, we are expected to take into account the following risk. Credit risk is the primary risk that we take up. Sometimes they may ask this question, which one is the first risk that you will take into consideration? The rest of which, it is not that we will not be taking up at all. Which one is the highest priority is what they would be asking. So, therefore, MCQs are always to be answered with a little extra care. Please read.
Fair value of a financial liability with a demand feature, that is a demand deposit, is A, not less than the amount payable on maturity, discounted from the first date that the amount could be required to be paid. B, not more than the amount payable on maturity, discounted from the first date that the amount could be required to be paid. C, not less than the amount payable on demand, discounted from the first date that the amount could be required to be paid. D, not more than the amount payable on demand, discounted from the first date of that the amount could be required to be paid.
See, all of you take extra bit of time, and whatever answer that you are choosing, please tell me the logic behind that. That's very important. Choosing the answer, I can as well pass on the slide very fast, but I just don't want to do that.
C.
Hmm?
C.
Who is that? Ramana?
Yeah.
Tell the logic.
Sir, first of all, it is a demand deposit. So first two are ruled out because demand deposit cannot be considered till maturity.
So these two will automatically be knocked off.
Ruled out.
Right.
Now coming to the repayable amount, the repayable amount should not be lesser than the amount what he is paying.
Correct.
Yeah. So it should not be lesser than the amount payable.
Okay. But read fourth item also, just to confirm.
Not more than the amount payable on demand.
Right. So it can't be not more than the amount demand. So it can't be less than payable on demand. So
correct.
Therefore, always you choose any particular answer, convey the logic. That is, you don't have to write under examination conditions. So to tell you to yourself, why is that like that? Why others cannot be considered correct? You will definitely be hitting the right answer. That I can tell for sure. Shall I proceed to next?
Yeah.
We have some more. Please just hold on until some more time. So maybe up to 50. Then we will take up other accounting standards which are a little lesser in content. Come on.
When the Ind AS 113 permits an entity to measure a fair value of a group of financial assets and liabilities on the basis of the price that would be received to sell a net long position, that is an asset for a particular risk exposure, or paid to transfer a short position, that is liability for a particular risk exposure, in an ordinarily transaction between the market participants at the measurement date under current market conditions. A, if the entity manages that group of financial assets and the financial liabilities on the basis of its net exposure to either market risk or credit risk. B, provides information on the basis of about the group of the financial assets and the financial liabilities to the entity's key management personnel. C, it required or has elected to measure those financial assets and liabilities at fair value in the balance sheet at the end of the reporting period. All of the above.
Please, you may just go through. It will take some time for you to conclude. Please just take that time, because some questions you can answer just like that. Some it will take some amount of time. So please just utilize the time and convey your answer with logic. That's very important.
Between market participants at the measurement date.
ठीक है, चलो पढ़ते हैं.
He manages the its information basis.
D, all of the above.
Huh?
All of the above.
Who is that? Ashok.
Yeah.
What is the answer?
D, last one, all of the above.
D for Delhi.
Yeah. D.
Why? You find all the alternatives are appropriate. So don't you feel that A and B are contradicting? So how on the basis of net exposure? What do you mean by that, net exposure?
Okay, the assets minus liabilities.
And here they say on the basis about group financial assets, group financial liability. So here, what do you mean by net exposure? You take into account asset and then deduct
And the
liability and find fair value for the net amount.
Right.
And in the second case, they see separately asset, separately liability.
Okay.
So here is required or as elected. So one is mandatory, the other one is where he is electing to do it. He has got the choice, something like that. So
and moreover, B, that is financial liability to entity scheme management personnel is of not specific relevance to this. In that situation, if I eliminate B, automatically D is also eliminated. Then we can look at A and C.
Who is that?
Sundarajan.
Sundarajan. Okay. Why do you select, why do you prefer B to be eliminated?
Because it is regarding providing the information on that basis about group financial assets and group financial liabilities to the entities KMP. See, we are working on the measurement of fair value for determining the market players or who, that is the person who is interested in acquiring this acquiring.
Correct. See, he is telling provides information on the basis about group financial assets and liabilities to entities scheme management personnel.
It's not by the yeah.
To the entity scheme management personnel, you feel like that this information is not required.
What I thought. That's what I thought. It is not by the entity scheme management personnel to the entity scheme management personnel.
Yeah.
See, it's not by or to. So please just have a look. But let me tell you the answer because it takes more time. The answer is B.
Oh.
Answer is B. So here, the compulsion as well as election, you don't have the choice of doing it as per your wish. So what your accounting standard is mandates, when they provide different methods amongst the approaches, you can follow that, but you don't have the choice of doing of your own. All the above will never be a choice here, and you can't take it upon net exposure basis. So what is most appropriate for a given scenario? It is like this. So for the same question, if there were to be another combination given, another alternative given, which is considered to be better, I will select that and not this one.
Oh.
It is something like in a particular scenario, who is considered to be the best, and the same character might come in another scenario. You would be finding even much better character you would be having. You may have to select the other one. So the choice is that we cannot reject one. We cannot reject one. The most appropriate in this scenario is only B. Okay. If we were to have, see, I will tell you one important thing. In the test examination, mock test, in the place where the examination, that is the place where 20 years I'm just taking class on financial management, I went wrong. I'll tell you what is that. Using options for price fluctuations. Is it A, hedging? Is it arbitrage? Is it speculation? All that they have asked. So when you are using option for price fluctuation, I have clicked it is for hedging. But end is that they have given arbitrage. The next set of questions I took up, because 25 questions only they give. Within 5-10 minutes, you can finish it off. Next time, same question came. Okay, same question in the sense, price fluctuation, that is usage of option for price fluctuation of underlying asset is what they given. One extra wording was there. But once bitten, twice shy, no. So first time I just selected hedging, I got as arbitrage. Second time I just clicked arbitrage, and that was wrong, and it was only hedging. So I just went through the questions with greater care. I just found the question without the wording underlying asset.
Underlying asset.
It is speculation, that is arbitrage. When they use the term underlying asset, then it becomes hedging. So this mock test, even though I had only 105 questions for recycling, and many times 25 out of 25 I got. So my daughter was just telling, Dad, don't be overconfident. So I said, okay. but at least that particular one of the questions in that test had come in the main examination. So therefore, sometimes we may feel that this may not be appropriate, something else. But amongst the four, which one is more appropriate is what we are, most appropriate is what we are selecting. So many a times we have just come from, after a very long time, we are taking up the examination. So please be careful in taking up MCQ.
Sir, in the previous question,
yes.
Sir, this it creates a confusion when it talks about the financial assets and liabilities, because we have a separate standard for financial assets and liabilities. So why we are covering this Ind AS 13 or financial assets liabilities under Ind AS 13?
One moment. So good question you asked. So financial instruments by itself is a vast accounting standard. Though for namesake they've included in the syllabus, not even one question they are asking in the financial instrument. Focus is more on to 113 only.
Correct.
Okay. So if you weigh the total content of financial instruments with the other accounting standards, the content that you have for financial instrument is much greater than the other items. But yet, why at all certain things are included in the syllabus is only to show to the world that they are including. But when you ask when you look into the question paper, you don't find not even one question there. Because I'm taking that, see, that particular financial instruments class. So the number of hours I take for financial instrument is 40 in the total hours of say 100, 40% of the time. But if you look into the utility value in terms of marks, maximum 12 marks, 13 marks only they ask on financial instruments. Sometimes it is like that. Shall we proceed?
Yes, sir.
That is why I'm telling you, sometimes we might just get a feeling that this could be wrong, but amongst the four, that one is the best. That's the way I want to look at. 31. It's easy only. It's easy only. Let me tell you, I'm just giving a hint. Okay.
Which of the following is variable?
Is it B? B?
D. D is correct.
B
D is correct. That is why I told you it is very easy, because almost all are correct. There is no item that we can leave it off. It is for sure that 3 and 4 are very much there.
Correct.
So 3 and 4, you have it in B, C, and D. Definitely correct. A cannot be a combination.
Correct.
Then for which sufficient data are available to measure fair value. That is also very much appropriate. You have it in 2, there is item number C, item number D. So A eliminated, B eliminated. Then techniques that are appropriate in the circumstances, never it can be considered as irrelevant. So all the 4 to be selected. So sometimes it requires a little extra care, but finally the conclusion is very easy conclusion only.
Cash generating.
I hope that all of you would be knowing something about cash generating unit.
Yeah. CGUs.
What is that?
Cash generating unit means operating cash flows are positive despite of loss of the entity, but some units are performing and generating cash flows, regular cash flows, consistent cash flows.
Is that the only yardstick to say that it is a cash generating unit? Do you have anything else?
Cash generating unit is where there are different assets involved. So you look at all the assets as a group and determine its cash flows, because individually for fair valuation purpose, it will be difficult to
see
cash flows.
Correct. Both of you are on the right direction, but I would like to make a small adjustment to that. cash generating unit is a combination of assets. Firstly, it's a combination of assets. Number two, it should have cash inflow, independent, and it should have cash inflow, and that combination of assets should generate that cash flow, which could be substantially independent in its performance. That's very important.
Correct.
So if cash inflow is present, but when it is dependent substantially on other assets, then it is not a CGU. So in order to take up that CGU, two tests you have. One is cash inflow test. The other one is it should be largely independent.
Independent.
So largely independent is very, very important. But it is coming number two. Two conditions only they have. So that is CGU. So there will be a separate area of discussion that we will be taking up in Ind AS 36. That time I will take it up for discussion. So anyway, I thought I will give some amount of introduction to that. Come on. So which technique is most appropriate in valuing cash generating unit? So this, you don't directly have it here. You have it in International Valuation Standards, IVS. There you do have. So therefore, I will just make it open because we have not discussed this here. So it is a matter from other accounting standard we are using it. So we have it in International Valuation Standards that where they are given for CGU, multiple valuation technique is to be used. Shall I proceed? This is not from Ind AS 113. It is from other accounting standard we are using it.
Fair market valuation.
Why? Why not multiple valuation? Why not single valuation?
Yeah, because it's an active market and you have observable prices. So,
see, the wording of the problem is indicator of something else. Tell. Just because fair value definition carrying the words like quoted market and all that, so you have to be a little more careful there. So the answer to that question is 33A. Okay.
Okay.
Right. So you people need to have some knowledge on other areas also to address this particular question. How many of you, I should not say good and all that. So having reasonable grip on financial management, how many of you? Or should I put it in a negative way? So I would like you people to focus on that. So this, of course, would be requiring some knowledge on other topic. So example of income approach for valuation technique. Option pricing model will come under income approach only. Okay, please remember these points. Shall I proceed? So because there is no debate on this, because you need to have knowledge on that particular topic. So based on that, a question is framed in this particular lesson. Come on, please. We have already answered to this question.
A.
Eva.
B.
Cash generating unit.
Cash generating unit.
Cash generating. We have
Sorry,
already
cash
done
generating unit. Sorry.
an examination. No, sorry, possible. Be careful. Next, please read out.
Single valuation technique will be appropriate A, valuing an assets and
You
liability
already
using
done that, but yet time asking. Yeah, correct. Remember, but one question, there is one point in two questions when it is asked. There is always a good feeling for remembering the point better than when all the points are covered in only one MCQ. Are you clear?
Sir,
Shall
so
I
one
proceed?
question. So one doubt, sir.
Ashok, shall I proceed?
Yeah, sir, one doubt. This single and multiple valuation methods, is it a specific valuation method mentioned in Ind AS 113, or are we just generally using the word like in a verb, like a verb we are using single, multiple?
See, your question is very well understood. See, the single valuation technique and all that is drawn only from international valuation standards.
Okay.
Okay. See, it is so only on 113 you cannot be expecting questions from other areas also. Option pricing model they need not have asked. Correct.
Yeah.
So see, we have other topics in knowledge dependence also very much required. See, all these approaches and all that, they are discussed in international valuation standards in a very detailed form. In a very detailed form, they have a discussion. Come on.
B. Objective of using a fair value accounting is to estimate the price at which an ordinary transaction to sell the asset or transfer liability would take place between the market participants, the measurement date under current market conditions. A, valuation technique. B, fair value accounting. C, cost approach. D, market approach. Answer is B, fair value accounting.
Fair value accounting.
Yeah.
Why you say that it is fair value accounting? So
I would
answer
say
is
A.
not correct. Answer yes.
Not correct.
I would say A.
A is correct. Yes.
Oh, value
Yes.
objective of using a valuation technique. Okay. Accounting is critical in that.
Correct. So please be careful. So this is what I'm telling you. So
valuation
can't say
technique.
sorry. It's a technique. See, for fair value definition for which all these words are there. But look at the question.
Technique. They are asking about the technique.
It's not accounting. Shall I proceed?
Yeah.
See, that is the reason as why many who took up the examination was cautioning me, and I had fear because of that. So nothing to fear on this. So have good reading, good practice, take up the examination, you will clear in the very first chance.
Discounted cash flow is an example of income approach, fair value approach, cost approach, income approach.
Income approach, correct. Income approach is correct. Because many times at our final, we used to multiply cash flow with PV factor to arrive at the net present value. So this matrix pricing is an example of ABCD, income approach, fair value approach, cost approach, market approach. This is also drawn only from international valuation standards. See, when you say a matrix, it involves many, correct? It will have rows and columns, it will have products, markets, etc. So definitely income approach is only single approach. Fair value approach, single approach. Cost approach, single approach.
Fair value approach would
quite
be
naturally, matrix pricing an example of market
fair
approach.
value. Market approach.
See, sometimes general knowledge also will prove. See, my next target is IBC writing examination only. So IBC code, this IBC code is going to be 257 section or so, lots of section, lot of dates, forms, etc. All that I got to remember as a student, go through that act. So finally, so through this mock test, out of mock test, once again, I took even before I could start preparing. Out of 25 questions, 15 questions I got it right. But I cannot consider that as the basis to clear the examination. This is only common sense application, but no negative marks this model test was giving. So negative marks, when they apply, definitely I will be less than 60% only. But keep practicing. That model examination will be very good. For IBC, they have 1,000, close to 1,000 as in the bank. So common sense application will work, but not in all places. Come on, next one. Item number 40. Please read it out.
The dash convert future amount to a single current amount. A, income approach. B, fair value approach. C, cost approach. D, market approach. I would say A, income approach.
Why? Why, Anuj? Why did you choose A for that?
So because income approach involves a discounting technique, and wherein we actually bring together all the future values to the present value.
Super. Correct. So converting future into single current amount is discounted cash flow. Remember, in discounted cash outflow, we have already connected with income approach in earlier slide. Did I tell you that? So very well you can connect. Easy only. Shall I proceed to next one? Yes. Please read out. So I think so 10 or more you have, and then we will take up on to acquisition accounting. Now it's 5 o'clock. So we have just ran 2 hours by now.
The dash reflects the amount that would be required currently to replace the service capacity of an asset. A, income approach. B, fair value approach. C, cost approach. And D, market approach.
Cost approach.
Who is that? Ramana?
Yes, sir.
Tell on what basis did you conclude the cost approach? You may be right, you may be wrong.
Sir, basically in the replacement model, we normally go by the cost. The cost of the asset, historical cost, and then we do the inflation.
Correct. That's right. That replace the service capacity is the key there.
Yeah.
So this income approach, we have already discussed the characteristic feature, and fair value is not buying, it is selling. Correct? Exit price. Market approach is not this one. It is where you have to bring out quotation, make adjustment to bring out the value. So that is not the appropriate thing. Appropriate thing is cost approach. Okay. I've already answered to this question in the last one itself. So I'm giving you the hint. Please just take the correct choice.
Market approach. Market approach.
Correct. That is what I told you. No, you pick up the information from the market, make those changes, and bring out the value. Correct. Already we have tried this, okay?
A, valuation technique.
Exactly. Anuj is just bringing it right. So valuation technique is correct. So everything fair value now. Please read.
An entity shall disclose and consistently flow its policy for determining when the transfer between the level of the dash are deemed to have occurred in accordance with Ind AS 13. A, fair value chain. Fair value principle. B, C, fair value hierarchy. D, fair value accounting.
It's easy only.
C, hierarchy.
Who is that? Ashok. You are right. So because when you talk something about this level comes only in hierarchy. Level 1, level 2, level 3. You don't have it this as accounting. It is not a principle nor a value chain. Sometimes we give the answer in the preceding questions.
A.
This came in the main examination for me. I remember this came in the main examination for me. But they did not use this term level 1 inputs. Exactly the same question. Same question appeared. That level 1 input information which you find here, not there, was not there.
A quoted price.
Quoted price. Correct.
Yeah, quoted price.
Hey, it was very easy for me, but I remembered now, because many times we felt, okay, our memory is very good. Soon after the examination, by informing all others, we have forgotten many things. Come on. Question number 47.
C. Unobservable inputs.
C.
Correct.
Lowest priority.
Unobservable input only, you should give the least priority. (48).
Correct. Right. Conditional.
Is it B?
D. D for Delhi.
D for Delhi. Correct. D for Delhi. It's right. Because in level 2, whatever discussion that you have made, assumption you got to make, you have to bring in, maximize the observable inputs. You got to bring in market inputs also. So coming under D. 49. In the principal market, you should ignore one, consider the other one. Okay.
B for Bombay.
B for Bombay.
B for Bombay. Okay. See, both are looking alike, no? Transaction cost and transportation cost. See, how I remembered, no? So it's a very simple one. See, in transaction cost, A comes first. That should come at the top. B in the alphabetical order comes later. So it should be put down. Okay. Some way to remember. That's it. Easy only. Come on.
B.
Correct.
B. Cash flow machine.
B for Bombay.
Yeah.
Correct.
Because all liabilities and equity instruments are covered.
Hmm.
51. See, I think 2 or 3 there. 53, 54, something like that.
This one of investment of cash consideration. Fixing it. Size. See. A. Acquisition investment property for cash consideration. Because other places there will be a fair valuation which will happen.
Please read it out carefully, sir.
Which one is not initially recognized? Which one is not acquisition of investment property for cash consideration? Acquisition of investment property of other assets.
So in fact, this we will be taking it up in the next accounting standard that we will be taking about not 3 business combination.
I think C is the right answer because receivables already have their values.
No,
So,
all the sorry, 51 A. That's correct. 51 A is correct.
A
is correct. Shall we proceed? Because for cash consideration, not initially recognized at fair value. In all other cases, yes.
Which one is the main feature?
Which one is not main feature of fair value?
Please carefully read the title.
Which one?
One is not a main feature of fair value.
Relevance.
Say it takes more time, no? So I will just put the answer. So with one more, I think so fair value will just come to an end. I've already told you, no, that C is going to be the answer.
Level of detailness itself. How much aggregation, segregation. So,
Up to 56 we have. Up to 56. Two more we have. Then we will take up on to 103.
how much aggregation?
Though they are not mandating it in 113, they have left it to the respective accounting standards to decide upon the disclosure aspects. But yet, the requirements generally conveyed, the level of detail necessary to satisfy the disclosure requirement should be made. Then?
D, sir. All of the above.
All, yes. All the four is more
Very
appropriate in this case. Correct.
Which of these is similar is not sure.
Sir, to all of you, let me tell you that of all the accounting standards, 113 is predominant in the questions. Out of say 6 questions, 4 appearing from 113, 2 appearing from 103. Not even impairment of assets, not even one question on financial instruments. Come on. Say I'm just going according to the requirement and the latest examination questions. Question number 55, please. So this, of course, bit tough. You would just take the answer. You can just go through the paragraph in the compendium. 55, 56, the last one. This is not Ind AS, but it is IFRS 13. So IFRS 13 and Ind AS 113 are parallel. Okay. So now at this moment, we will switch our focus on 103. Is it okay? So as you people are working from, that is viewing only from home, you have the comfort of having something. So let us not have the break. We will just go run through the full 3 hours class. Okay. Okay. Are you seeing business combination now?
Yes, sir.
103. Okay. So this will run for some 16, 17 slides, but we can move fast. No problem at all. So now the time is 515. Ind AS 103. Business combination. So this is for which you have in older accounting standards what we had prior to Ind AS being AS 14. But AS 14 was a very limited accounting standard, whereas 103 is a wider accounting standard which covers a lot of aspects which we would not have visualized in the earlier accounting standards. So before I could try something on this, so let me just pick it up this way. What is the difference between merger and acquisition? So just 2 minutes of discussion I want from you. Come on, what do you understand merger and what do you understand from acquisition?
In merger, the transferor company liquidates. And in acquisition, the transferor company will merge, it will be acquired by the transferee. So in merger, we normally create a new company to take over the old companies, transferor companies.
Okay, that means
apart from that, the assets and liabilities are taken at book values in merger, and purchase considerations are settled only by issuing share capital.
Okay, that is in the case of merger, is it?
Yeah.
How about acquisition?
Acquisition purchase consideration can be settled in any manner other than equities also. It could be paid in cash or maybe by issuance of debentures. Assets and liabilities can be taken at fair value other than the book value. The business of the transferor company need not be continued, and the significant accounting policies adopted by the
I think you are talking about the conditions of merger.
Yeah.
But I don't want the condition of merger. I want basic difference between merger. These are all merger. These are all acquisition. Something like that. Very simple and for basic learner. I don't want these conditions for merger accounting and all that. Simple. Something like equation, A plus B, something like that. You can try.
So merger is
between,
merger is between equal entities. Acquisition is one, a bigger entity acquires a smaller entity. Also, acquisition can also mean just acquisition of shares without combining into the entity.
Okay. So you are putting acquisition like big and small, whereas in the case of merger, they should be of equal level and all that. So maybe true, but not exactly when you consider reverse merger and all that. One is small, the other one is big. Smaller company taking over bigger company. We have it in merger. But acquisition, so it will not be correct in all times. I will not say you are wrong. So it may not be appropriate. Any other explanation?
A plus B will be C in case of amalgamation. In case of an acquisition, A acquires C, C is getting dissolved, A will become live.
So
in acquisition.
B will not be there at all.
Pardon?
B will not be there at all. That is
B will not be there. A and B will be there. B is acquired by A. B gets dissolved. A will continue. In this situation, it is not an amalgamation. A acquires B.
Okay, but which one is merger and which one is acquisition? You are talking about amalgamation.
A plus B is equal to AB is a merger.
That is merger. Okay. Then
A plus B is equal to A. For example, A plus B is equal to A. It's an acquisition.
It is an acquisition. So in accounting, we call this as absorption.
Absorption. Correct.
Okay. How many of you agree with him?
Acquisition in the form of acquisition of the shares of the other company, in which both entities could continue to remain as independent entities.
That is,
there's no compulsion. A plus B can be equal to B also. There's no problem.
Or you change the name only, no?
Correct. That's all.
Okay. How about Shiva?
No, and possibly acquisition need not lead to any, extinguishment of any of the companies. Both can continue. One company acquires rights or shares in the other company.
Okay. How about Anuj?
Yes, sir.
What's your opinion on this?
Yes, sir. I believe merger is combining the things, combining two companies together.
Okay.
Forming one company only, and amalgamation is takeover of another company.
Okay. Okay, thank you. See now, Mr. Sundararajan, see you find in mathematics we used to have a plus b. Left hand side of two equations are same.
Okay.
So therefore, I will conclude this way: merger is equal to acquisition. Shall I write like that as per your statement?
Oh, here it's not a merger is equal to acquisition, sir. Acquisition is separate, no?
No. A plus b equal to AB, and on the left hand side for the other one, a plus b, both are same, no? So this a plus b is merger. This a plus b is acquisition.
No, A plus B is equal to AB is a merger. That is how it has been understood.
See now I will tell what exactly is merger. Say we understand that amalgamation and absorption are two different forms of merger. Two different forms of merger. This AB or A or B are only legal fiction you create. But in substance, it is only A plus B. Isn't it? In substance, A plus B there. So therefore, what we were telling it out as amalgamation and absorption, both are merger only. You call in accounting as amalgamation or absorption, but both are merger only. What is that then you find in case of acquisition? So acquisition where Raman was just telling something about you give it in the form of cash, shares and all that. But there he was just concentrating more on the satisfying the conditions. That is the reason as why I told you or why I've asked Raman that why don't you give it in simple example. So he had hit the point, but not fully. So in the case of acquisition, you have parent subsidiary relationship that you have. So parent holding majority shares, that is what Shiva was just telling. That is what Ashok was also referring to. So you have parent subsidiary relationship. None of the company is getting liquidated. Whereas in the case of merger or in the case, that is in the case of amalgamation and absorption, there will definitely be loss of identity of one or more companies you would be having in the case of merger, but you don't have it in the case of acquisition. So what we had in AS 14 in the earlier accounting standard is that they were focusing only on merger. And they did not mention anything about us how to account in the respective books of accounts. And they said, please better try it under AS 21. So AS 21 did not address this point. Therefore, we had a lot of confusion. So now this merger and acquisition both are handled in one accounting standard in Ind AS, that is 103. So that is the uniqueness that we never had in the earlier accounting standard. So if you start learning more about these accounting standards, we will definitely have dislike towards looking at AS 14, AS 21 once again, because it addresses variety of practical issues which was not addressed at all. Anyway, I had a good opportunity to make clear this particular point. So business combination takes care of both AS 14 as well as AS 21. See, that's a very, very important point there. And business combination is not only merger, we take into account acquisition also. That is the reason as why the title is given as business combinations. It's a transaction in which acquirer obtain control of another business, either through merger or through acquisition. That they have not mentioned it. Is it clear? Are you clear? Shall I proceed?
Yeah.
So next one is that the following is not a business combination. Many people immediately take up the other item as business combination, formation of joint venture, acquiring an asset or a group of asset that is not constituting a business. See, in Chennai it is raining. a little heavily now. So please just understand, formation of a joint venture is not business combination. Acquiring some bunch of assets and liabilities and adding to your portfolio is not business combination. That bunch of assets and liabilities should have constituted a business. Say, for example, if L&T were to sell away their IT wing or forming a new company, so definitely the assets and liabilities related to that IT wing and acquired by one of those other companies within the group is definitely falling under business combination. Buying few assets of some other company for your production purposes will not be a business combination. Therefore, what is very important is that constitution of business should be there. So people will be asking the question, what do you then buy business? Business should have some process. In a process, you should have some input. Sorry, in a business, you should have input, process, and the output. Only then it is a business. Otherwise, by buying one asset, it is not a business that you bought. So therefore, what is very important to bring a particular transaction into this accounting standard or outside the accounting standard is only the presence of business. If you have business, then it's business combination. If you don't have this business, then it will fall under PPE, that is Ind AS 16. So important element in the case of business combination is that control should be obtained. That is, what is control? Control generally we consider as more than 50%, but need not necessarily be 50% in all cases. Need not necessarily be 50%. So you all know that if a company could control the board of directors, composition of board of directors, or when there is a specific agreement between the two companies to have control, then also you can have that. Are you understanding? The next, what is a business? This I've already explained. Steps in acquisition. So there could be one-shot acquisition whereby I buy 60% of the capital of the other company, or that 60% I would have got it, say 45% in the first lot, another 15% in the second lot. So stepwise acquisition is also a possibility. But when is that you consider that you have acquired control? When you are crossing that 50%. So therefore, steps is that in acquisition, there was also one question. What is the first step that you have got to take up? Identifying the acquirer. They will just put 3-4 combination. So identifying the acquirer is the very first step. Then determining the acquisition date and recognizing the identifiable assets and liabilities and any non-controlling assets. And lastly, recognizing goodwill or business purchases or bargain purchases, bargain purchases. So this is very, very important slide. So I would like you people to just write this in your notebook. Write this in your notebook. Even though I will share this, please just don't worry about that. Please note down this one. Or take a screenshot. But I want you people to write. So then people will ask this question, why would acquirer is a very important step? See, in any transaction, you can easily identify who is the transferor company and who is the transferee company. Who is considered to be a transferor? Who is a transferor company? A company which is transferring their assets and liabilities is a transferor company, vendor company. The company which is taking up these assets and liabilities, you call them as transferee company or purchasing company. But when it comes in reverse merger, it will not be that as you find in other cases. What do you understand from reverse merger? Any idea about reverse merger?
Where a bigger company is merged with a smaller company, or a listed company is merged with an unlisted company. Into
Who is that? Who is that? I'm not just
Shivakumar.
Shivakumar. Okay. Right. Correct. Say smaller company taking over a bigger company, and listed company which may be small in size, whereas unlisted company may be bigger in their business size. So where a smaller company taking over a bigger company, loss-making company taking over a profit-making company because of the tax benefits that they would derive. So in all these cases, who is a real acquirer? Can you just say that the smaller company is the acquirer or the bigger company is an acquirer? Generally, the transferor company is the selling company. That company will receive purchase consideration. But in the case of reverse mergers and all that, what is appearing to you as a selling company in any other case will become the buying company. Therefore, what is very important in this business combination is the first one, identifying the acquirer. Are you understanding? That's why I told you that you have got to make note of this. So you have got to be very careful in identifying the acquirer. That becomes a very first thing. And determining acquisition date. So the day on which you cross that 50%, that is the time at which you go gain control, and therefore acquisition date is very important. Then recognition and measurement of identifiable assets and any non-controlling interest. So in the case of this merger, what will happen is that the assets and liabilities are immediately incorporated in the books of the buying company, and therefore they are to be recognized at fair value. And in case of acquisition, not in the form of merger, you don't take up the subsidiaries assets and liabilities into the books of the parent company except for the case of consolidation. So there you go for consolidation, and there you have two different methods given in 103 to be followed for consolidation. As how do you handle non-controlling interest? Will you be handling it on fair value basis, or will you be handling on net asset basis? So that will decide upon whether the goodwill that you would be taking up, whether it is a full goodwill or a partial goodwill. So therefore, automatically, the last point is coming in a natural form. Is that clear? So therefore, this particular slide is assuming a lot of importance. Shall I proceed to the next one? The next one, of course, we have already discussed, more than 50%. So therefore, business combination would mean it is not amalgamation accounting alone. We do take into consideration the acquisition also, parent-subsidiary relationship also in bringing out this business combination discussion. This, of course, I told you what is a forward acquisition and reverse acquisition. Vendor assumes control. Please understand. That's very important in the case of reverse. Shall we proceed? It is always a dominant company will be dominating. Or because of the domination, you identify which one is the vendor company. Or sorry, which one is the acquirer. Identification of the acquiring enterprise is very critical, and the accounting may change significantly. The accounting acquirer is different from that of the legal acquirer. That is the reason is why I told you, you got to be very careful. So 2 marks, 2 questions will come. So that half an hour spending is going to be equivalent to 2 marks. That is the reason is why I've just taken up. So that's 113 will be asked for 4 questions, 4 marks. Okay. This, of course, I've already explained to you. Step acquisition, this I've already told you, the date on which you cross that 50%. What items are covered under purchase consideration? A lot. Cash, assets of the acquirer at fair value, acquiree, I think so. So these are the items that will be taken up as part of purchase consideration. Okay, shall we proceed? This is very important. Make note. Please write. Because all these exceptions will be a test for your memory. So please just make note of this. Shall I proceed to the next one? This is very important. They will ask this question, should that be capitalized or not? This is very important. What to recognize under business combination actually. Sorry, extremely sorry. There is a identifiable account shall meet the definition of asset or liability under Ind AS. Record only asset and liability which are a part of business combination. Not to recognize asset and liability not related to business combination. Record assets and liabilities even if the vendor had not recognized ever before intangible assets, brand name, etc. So on this there could be a question. Please be careful. This I told you already. So measurement principle is common for both merger as well as for acquisition. In the case of non-controlling interest, as on the date of acquisition, the fair value for non-controlling interest, this is applicable only for acquisition. So if it were to be merger, this will not be there at all. So only this will be there for merger. This will be there for acquisition. Whereas accounting standard is common for both. Shall I proceed to the next one?
Yeah.
Okay, that's all. We have just come to an end there. And now we will proceed for MCQ on 103. One moment, I will just arrange for
fair value.
No, in the same file only we have, but I'm just looking for another number. Yes. Business combination. Is it okay? So,
yeah.
Introduction, now we will crack this problem. So, it is item number 121. So, it goes up to 149. So, fair for when you have 25 minutes for this. Come on.
A, first one.
Huh?
A.
Which
relevance,
one?
A for Apple.
A for Apple. Okay, correct. Relevance, reliability, and comparability. Correct. So this particular point we would not have discussed, but it is a general knowledge question only. So please just
D for dog. All of the above.
All of the above. Did you read all this?
A and B I read.
Because
C.
I was just only doubting us. How come you have read all this so fast? Can you read?
Okay, Ind AS 103 establishes principles and requirements for how the acquirer A recognizes and measures in its financial statements the identifiable assets acquired, the liabilities assumed, and any non-controlling interest in the acquiree. B recognizes and measures the goodwill acquired in the business combination or a gain from a bargain purchase. C determines what information to disclose to enable users of the financial statements to evaluate the nature and financial effects of the business combination. D, all of the above.
So only after this much of time you can convey your answer. But anyway, question is a little easy only. So I would just consider that it is correct. You're right. Good. Please. I don't know whether it is going to be all of the above in all the cases. Okay. So please be careful.
A.
Say, please read the question carefully. Okay. Does not apply.
C.
Huh?
C.
A.
So who said Raman? So
Yeah.
please just understand that question A, where they say the acquisition of an asset or group of asset, that does not constitute a business.
D, all of the above. All of the above.
All of the above. That's correct.
All of the above.
So they are just getting first three questions, all of the above.
A, business combination.
A, business combination, correct.
B, acquisition method.
Acquisition method. So one important thing which I want to tell you is that we had two methods in case of AS 14. That being purchases method and pooling of interest method. We don't have double method. We have only single method. That is acquisition method. Please read out. One of you, please read out.
An acquirer might obtain control of an acquiree by transferring cash equivalent of other assets, by incurring liabilities, by issuing equity interest, all of the above.
All of the above.
All of the above.
All of the above is correct.
Yeah.
All of the above.
All of the above. All of the above.
So we can say this series of all of the above. Correct only.
C.
C, both A and B.
So this is what I was just referring about. Even without reading the question, in 190 out of, I went for, when I was just discussing with another colleague, I was just telling, sir, don't take like that. But I given the assignment to him, he just said, sir, 190 out of 200 were on that track only. But definitely questions are not of that type in the main exam. 129.
All of the above.
Hey, what is this? Are you reading the question?
All of
Yes,
them.
yes, fully read it.
Very fast reader you are. I think within half an hour you can complete 2 hours paper. Please utilize all the 2 hours, please. Okay. Say I want all of you to share your success story, and I would be very happy to hear from you. Okay.
Sure,
My
sir.
number
Sure,
is
sir.
very much there at the top. Is that true? Is that D?
Yeah. C, 110. C, 110.
Correct.
All of the above. D.
Ashok has got a good grip on 103. Good.
Business. B.
Huh?
B for ball.
B. B for Bangalore.
Yeah.
Ashok got it right.
A. Business.
Correct.
Business.
Correct. So I think all of the above is what our friend will immediately select.
Yeah, it's all of the above.
All of the above. Okay. So cakewalk.
Here.
Correct only. Correct only.
Acquire means the entity that controls
Control.
Control. See, by and large, this is very easy only.
Acquisition date.
Acquisition date.
Is that all of the above? Because all of the above is present.
Yeah, all of the above.
Oh,
Because all the points, what we have discussed only we have.
correct.
All of the above.
All of the above. Correct. It is a very typical question only. It becomes a little tight to identify, but I would like you people to try this.
Acquired types.
It should be contingent liability only.
Huh?
It should be contingent liability.
Reacquired assets, rights.
No, I'm just not understanding. So Ashok was
B
just
for Bangalore.
B for Bangalore. Okay. Why?
Because compared to other standards, contingent liability recognition is slightly different. You don't have accurate measurement. You take probability and all that.
Not correct. Not correct. See, contingent liability can be recognized, but sometimes what will happen is that if it cannot be measured, which is to be disclosed. So it is recognition and measurement. So suit filed against the company where damages are not known to us, so we will not be in a position to measure it. Correct. Reacquired rights also like that. Share-based payment also like that. The one item which is falling under exception of all these three is income tax. It is income tax. We have already done that in the previous slide.
Yeah.
All the above.
All the above.
Because but you don't get questions back to back like this under examination conditions. So please be careful with that. $141.
Goodwill.
Sure?
Yeah.
How did you say? Why can't it be bargain purchases?
No,
You are correct, but on what basis?
Yeah. No, it is like a proper acquisition accounting. So it says excess of consideration.
I will help you. So the key is lying in excess sum consideration over the fair value
net asset.
And even non-controlling interest also they have measured something about that.
The most important thing is stage acquisition.
That is excess sum consideration. If your payment is more than the worth, the extra sum should only be goodwill.
Yeah.
The extra sum should only be goodwill. Say we used to have a lot of fun in our college, where the place where I studied was Vivekananda College. A professor used to ask this way. So you know that you're paid more than its worth. Is it a loss or gain? Loss. But you call this as, you used to ask this way, you are paid more than the worth. Will you feel bad or good? You know the worth, but you're paid more. Will you feel good or bad? The same question I'm asking. Will you feel good or bad? All of you? Huh?
If you pay
Bad.
more, it is
But what is the name of that difference?
Goodwill.
So we used to really have a lot of fun with that professor. It's a very nice way, but he himself will find solution. See, you should not feel bad when you're paid for its worth. So when the worth is 110, when you're paid 125, you knew it that it is worth only 120, but you're paid it 125. That means when you know it, then it becomes not a loss. You will not feel bad. So one and only when the worth is not known, but you're paid more, you will have the bad feeling. Whereas everything is known to us and still you're prepared to pay more. That means you're paid for something which you are expecting, that being extra earning capacity of that entity, and thereby you call that as goodwill. So he finally referred to all this in a very nice manner. The Vivekananda College is such a great college. So I studied there between 83 and 86. That was my evening college batch.
Sir, can you throw some light on bargain purchase? What exactly?
Bargain purchase is the reverse of goodwill. What you are considering it as capital reserve, you are calling it out as bargain purchase. That's it.
Yeah.
If the consideration is less and the worth of the assets are greater, you don't call it here as capital reserve. In old accounting standard, we used to call it out as capital reserve, whereas here we will call it out as bargain purchases. Okay, that's a change only in name. Goodwill. So something is hanging there. So some problem in my system. Can you hear me?
Yeah. I can hear you.
So it's just going rounding that way. So I just have some problem with the computer. No, it is 5:52. Anyway, I will just wait for 2 minutes. It should not be hanging, but one moment I will just find out. I think it's resolved. It's showing PowerPoint stopped working. One moment. So can you just see? Is it okay?
Yes.
Yeah. Good. Even 5 minutes I don't want to miss.
B.
B. Bargain purchase.
Bargain purchase.
Step acquisition.
Huh? Step acquisition. Correct. Step acquisition. See, this point we have not discussed, but I will just tell you, A. This point we have not discussed. It is A. See, because there was a field that I got to cover at least 2 accounting standards. So certain areas I did not cover. So along with the problem solving, we will be just getting. So next one, 145. So Ashok will be there to say all of the above. Let me just see.
So all of the above.
All of the above only. D.
All of the above. Correct, correct. See, A part is something to do with the buyback of shares.
Yeah.
So I was holding only say 40%. When I allow the acquiree to go for 25% buyback, so now the capital that I hold will continue to be 40, but the reduced capital of the acquiree will make me as a parent. Likewise, they started explaining each one of those cases. So what the main question is that an acquirer obtains control without transferring consideration. With some happening at acquiree's place,
some conditions.
their holding is improving. When the denominator is changing, getting reduced, my numerator continuing to be the same. So you find you are crossing that 50%. All of the above. Very good question it is.
Yeah.
Sorry, it is all of the above only. By mistake, it is all of the above.
Yeah.
That is all of the above. This also I told you, it's fitting into the format not asked in the main examination.
Yeah, I think C only, either or A or B.
During the current period or after the end of the reporting, but before financial statements are approved for issue. 147.
Net consideration.
Contingent consideration.
Contingent consideration. Raman, please be careful. You are rushing. I'm cautioning you. Please be careful. It's contingent consideration only.
C, either. It should be C, pattern.
Correct. C only. That fixed pattern only. So under examination condition, you will not get, but other important points are very important. So please be careful. Instead of either A or B or none of the above, they could give some other points. Shall we proceed for the last one? Last one for this session?
Yeah.
So, which is also coming in this format, but anyway, please go through that and please.
Already dealt question. This is C.
Already dealt. Okay. Anyway, the standard format is either A or B, and it is all over at this point of time based on time only. So now it is 6 o'clock. So it is not based on the content. So definitely even 3 hours also given would mean we can cover some more also. So it is a wonderful opportunity for me to share my knowledge, whatever a little that I've acquired during my being a faculty member for CA Institute and for my own coaching class. So definitely your participation level was very good. So my first ever class for this RVO, though I have attended to this class a few weeks back. So with the Almighty's grace and others' wishes, I have cleared the examination. I wish you all the very, very best. And in case of any doubt, you can just definitely mail me, WhatsApp me, and the other one, you can put a telegram also there. So I just thank GK Raju who asked me to take this class. I was just not knowing this as an opportunity. I was only looking for an opportunity of being on the professional side. So anyway, for me, there was no problem at all. Immediate choice was this. And for FM areas. So one more important thing which I want to tell you is that this ethics that you have, some 30 points they have just given. It is better that you write points in your hand and try that, because definitely there is a good number of questions that they ask on ethics, which I thought it flashed my mind. I thought I will let you know. Okay. So thank you for giving patient hearing for my class. In case of any doubt, you can just contact me at any time. Thank you.
Thank you very much, sir.
Thank you, sir.
Thank you very much, sir. It was raining outside in Chennai and raining inside the computer. Raining of water outside and raining of knowledge through the computer.
Thank you. Thank you. Thank you.
Thank you very much.
Thanks a lot. Thank you.
Thank you.